So when you talk about this chapter baggage, small chapter but very important chapter, simple chapter for your marks purposes. Now what do you mean by baggage? Baggage in simple language means your personal effects, but other than motor vehicle. Motor vehicle will never be categorized as baggage. You can never call motor vehicle as a baggage. It will always be treated as commercial cargo. So when you want to understand baggage, understand that goods can be categorized into baggage and commercial cargo. What do you mean by commercial cargo? All other goods other than baggage are commercial cargo. All goods other than baggage are all commercial cargo. Motor vehicle is always commercial cargo. What is the significance of baggage? Baggage, you might end up paying customs duty, but you don't require I code. You don't require I code, import export code. For commercial cargo, for you to import commercial cargo, you do require I code. For you to import and export commercial cargo, you do require I code. For baggage, for you to bring and take out baggage, you don't require I code. When you bring in baggage, at times you end up paying import duty. Though you are making the payment of import duty, you don't require I code. Now, when you talk about commercial cargo, what are the main forms for clearing the goods? Be it import or be it export. For import, bill of entry. For home consumption, if you're directly clearing it from customs station, or bill of entry. For warehousing, take it from customs station to customs warehouse. From there, file bill of entry for home consumption and take the goods. Bill of entry for export. Shipping bill or bill of export. Shipping bill or bill of export. These are the customs document for importing your goods and exporting your goods. When you talk about your baggage, no documentation, no customs document. This is baggage declaration form. That too, when you talk about baggage declaration form, if you have got nothing to declare, no need to even declare anything, no need to even tell anything. Just walk in the green channel. In the international airports, there will be two channels, green channel and red channel. And whenever you are coming from an international flight or going outside in an international flight, understanding their customs law, you will be given a advisory kind of stuff, that what is to be done and what is not to be done. So if you have nothing to declare, walk in green channel. If you have something to declare, then you have to walk in red channel. When you have something to declare, walking in red channel, there you have to give a baggage declaration form. There you have to give a baggage declaration form. Section 77. Now, as I said, at times you may end up paying baggage duty as well. Customs duty on baggage. Now, before we go to customs duty, what is the classification of baggage? Commercial cargo will always have separate classification. From chapter 1 to chapter 96, there will be separate classification of each of the item. For mobile phone, there will be a separate classification. For laptop, there will be a separate classification. For watches, there will be separate classification. For perfumes, there will be separate classification. For accessories, there will be separate classification. But all these items, right, starting from your mobile phone, laptop, watches, perfume, accessories, if you bring them as baggage, they're all classified under the same heading 9803. If you bring them as commercial cargo, they'll be having separate classification. But if you bring the same items as baggage, forget the technical classification. Focus on chapter 98 heading 9803. Chapter 98 heading 9803. In short, you don't see what exactly the item is. You call it as baggage. Be it your laptop, be it your mobile phone, be it your watch, be it your new clothes, be it anything. You call it as baggage. You call it as baggage. 9803. Now, commercial cargo, when you have commercial cargo, respective import duty you are going to pay. BCD, SWS, IGST based on the classification. There's no exemption. At times you are required to pay additional import duty, special import duties. Anti-subsidizing duty, anti-dumping duty, safeguard measure. These are three special import duties at times you are required to pay. But when you talk about your baggage, you'll be paying only and only BCD and SWS. IGST is exempt. IGST is, what is the BCD rate which is there under 9803? 35%. What is the social welfare surcharge which will be charged on BCD? SWS will be charged on BCD 10%. Net effect, what will be the rate? 38.5. 38.5. So that is given in your, for your exams. Whenever a question of baggage comes, it is 38.5, right? 35% BCD and 10% SWS on that BCD. IGST is exempt. Now moving on to the provisions of baggage, directly we'll see the sections all here. Section 77, we are done. Declaration. If you have nothing to declare, no declaration. If you have something to declare, give a baggage declaration form, walk in the red channel. Section 78 also we have completed. What is the relevant date for finding out the import duty on baggage? Date of giving declaration. As on date, the rate is 38.5. As on date, the rate is 38.5. That is section 78. Section 79 tells that if you are bringing bona fide baggage, if you are not hiding anything and bringing your baggage, you will get baggage exemption, technically called as general free allowances. General free allowances. GFA. General free allowances or duty free allowances. General free allowances. In simple language, section 79 gives birth to baggage rules 2016. Section 79 gives birth to baggage rules 2016. Then you have something called as section 80, very peculiar provision and very logical provision also. Section 80 tells that, just understand we are talking about a foreigner. Keep that in mind and discuss this provision. If the foreigner comes and he is surprised to see the baggage laws of India, he has brought a lot of items and suddenly he sees that he has to pay duty. Then he tells no. Out of all these 10 items that I've got, a guitar, etc., all I've got, I don't require these in India. India is a musical country. I'll find music anywhere. So I don't require all these instruments to be taken along with me. So what he does? He is asking the proper officer to take these baggages, whether they are dutiable or prohibited. Take these baggages. He might bring something which is not prohibited in his country, which might be prohibited in India. So he is asking the proper officer, please have this baggage and detain this baggage. But the condition is, the passenger should have given true declaration. True declaration. Proper officer may detain that article. Now, for the very first time, you will find something very peculiar in customs law, where detention is being asked by the assessee. Assessee is coming and telling that, see, I've got these dutiable goods or prohibited goods, and prohibited goods I cannot take inside. Dutiable goods, if I take, I have to pay baggage duty, and if I go back, I'll have to claim the refund. I have heard about India. Refund is very difficult to get. So, better I keep the goods here. You please detain the goods. I'll be paying the prescribed fees. I have to pay some fees. Right? You keep the goods here. These detained articles will be returned back to the passenger when he's going, or can be returned back to another passenger on the instruction of the main passenger, or if that passenger is coming via Chennai but leaving via Mumbai, he can also inform the officer to send it as a cargo consignment. It's possible. Obviously, he has to pay the charges. He's required to pay the charges. That is section 80. Now, whatever you discuss is not for your exams. Now starts your exam calculation. Only from these areas you will be getting questions in your exams. All the duty free exemption limit, otherwise called as general free allowances, are in your baggage rules. Now understand that how to remember rules. First, it is either rule 3 or rule 4. Rule 3 or normally the rules that is applicable is either rule 3 or rule 4. If you are bringing jewelry, new jewelry, rule 5. And if you are permanently transferring your residence, rule 6. Normally, you will not be touching 5 and 6. 7, 8, 9 at a time pass. Waste of time. Alright. The rules are only 3, 4, 5, 6. The calculation rules are only 3, 4, 5, 6. Main rules are 3 or 4. It is either 3 or 4. 5 when jewelry is involved. 6 when you are shifting your residence from outside India to India. Now rule 3 or 4. Why I am telling 3 or 4? 3 or 4. 3 is applicable when you are coming from a country other than Nepal, Bhutan, Myanmar. Whenever I see this, I am helpless. I keep telling this. Indian government made a mistake in 2016 by removing China from here. It was Nepal, Bhutan, Myanmar and China. Nepal, Bhutan, Myanmar and that was the only period where we were a kind of having good relationship with China. We did not make this single mistake in customs. So you made another mistake. There was a special safeguard duty only for Chinese products. We understood that China is going to change. We changed the provisions. I don't really understand now when the situation is back to zero, why don't they bring those provisions back? It's not there. So here it is Nepal, Bhutan, Myanmar. Why I am telling this? If you're coming from USA to India, rule 3. China to India, rule 3. Coming from USA to India, rule 3. China to India, rule 3. More exemption. More exemption. And people misuse this China provision like hell. Whenever they used to go to China, there was a list. Even when your friend goes outside India, there's a list. Every time he'll bring one item for you. Right? China was misused to the people in airports. When they were coming from China, they used to carry LCD, LED. And then they realized, no, not done. They put that in Annexure 1. Thanks to China. They put that in Annexure 1. Annexure 1, you cannot take any baggage exemption throughout rule 3, rule 4, rule 5, rule 6. Your flat panel television, be it LCD or LED. If you go back and see the amendment history, you'll understand it. You'll appreciate it. Why it was brought. It was not there in the beginning. The items were stopping. This point was not entered there. Thereafter, when they amended this provision, they amended a lot of things. But the amendment which was for China, relaxation for China, was earlier than this amendment of flat panel television. Because they were seeing that people were going to China and coming with, everyone is wanting a television. And at times officer was seeing these people and seeing that again and again this person is coming. Few people will be regular visitors to China for business purposes. Every time he's coming, every time he's bringing television. God only knows how many television he's having at his home. Right, so therefore they said that we are not going to give any baggage exemption for flat panel television, be it LCD or LED. So that was introduced again because of China. Now coming back to your rule 3, if you're coming from USA to India, rule 3, China to India, Sri Lanka to India, rule 3. But if you're coming from Nepal, Bhutan, Myanmar to India, it is rule 4, lesser exemption. Lesser exemption. Lesser exemption. If your trip starts at USA, then to Nepal, then to India. Starts at USA, then to Nepal, then to India, rule 4. Rule 4. If your trip starts at Nepal, then to USA, then to India, rule 3. And when I'm telling trip, you are actually staying there. I'm not talking about connecting flights. If it is USA via Nepal and India, it will be treated as US only. Nepal was only a intermediary airport. I'm not talking about that stuff because you never entered the real landmass of Nepal. So that point I'm not talking about. You stayed there. I'm talking about a case where you stayed there. Now, what is the difference between rule 3 and rule 4? Now, what is the common point first we'll cover? First, they talk about infants. First, they talk about infants where you're talking about a child up to 2 years old. Up to 2 years old. For infant, they tell that we will give the benefit for the used personal effects, unlimited exemption. Their used items, full exemption. Their used items, full exemption. Their used items we will be giving Full exemption. When I tell no upper limit, it means full exemption. But it is used personal effects. When I talk about used personal effect, it means used items. Used items, old items, used old items, full exemption. Full exemption. Now let us see the differentiating fact. Rule 3 is bifurcated based on the type of passenger. The type of passenger. If you are an Indian resident or foreigner residing in India, which means he is permanently there in India, foreigner residing in India. He is not a tourist. He is not a tourist. What do you mean by tourist, by the way? Tourist means a person who stays in India for less than 6 months. For less than 6 months. He is not a tourist. Say for example, a foreigner has come to India and he is taking a spiritual course for a long time in Isha Yoga. He is a foreigner residing in India. He is not a tourist as per your GST law as well as your customs law. Both the definition in GST law and customs law is the same. Or tourist of Indian origin, which means now you are talking about the tourist, but origin is India. Origin is India. So you are talking about tourist of Indian origin. Right. In the first category, they will give you more exemption. What is the second category before we see the exemption? Second category is tourist of foreign origin. Might be he is going to come soon. Tourist of foreign origin. Tourist of foreign origin. Right. So first category is Indian resident. Indian resident means a valid passport holder. Indian resident means a valid passport holder. Second, foreigner residing in India, tourist of Indian origin. Next category, tourist of foreign origin. Tourist of foreign origin. Now, in the first category, if you are talking about your used personal effects and traveling items, used personal effects and traveling items, unlimited exemption. Even in the second category, if you are talking about used personal effects and traveling items, unlimited exemption. There's no limit. There's no limit. For your old items, there's no limit. The limit is only where? The limit is only where? For the new items. For the new items. For your new items, where you're talking about articles other than, don't remember Annex 1. Annex 1 benefit is not there in any of the rules. Just remember for your new items. For your new items, limit is 50,000 for the first category. Limit is 15,000 for the second category. 50 for the first category, 15 for the second category. What is common in both these categories? Used items, unlimited exemption. What is differentiating factor? New items. New items. First category, 50,000. Second category, 15,000. 15. Just remember these numbers. We will continue these numbers in Rule 4. In Rule 4, the bifurcation is not based on the type of passenger. It's based on the travel route. It's based on the travel route. If you are traveling by air or water, if you are coming from Nepal, Bhutan or Myanmar through air or water other than land, or if you are coming through land. If you are coming through land. Even here, if you are coming by whether air or water or whether by land, used items. Technically, there is traveling items which is removed in the next category, not so important. Used items. Unlimited exemption. With respect to used items, there is unlimited exemption. Even here, there is no difference. Be it Rule 3, be it Rule 4. Be it any type of passenger, be it any type of route. Used item. Unlimited exemption. The difference is only where? New items. Difference is only where? New items. New items in the first category. The lower limit of Rule 3, the lower exemption of Rule 3 is the higher exemption of Rule 4. Now it is 15,000. First category in Rule 4 is 15,000. Second category, no exemption. When nothing is given, it is no exemption. No exemption. You can remember this way. 50, 15, 15, 0. We are only talking about your new articles. You need not remember other than Annex 1 because Annex 1 benefit is not there under any rules. Be it Rule 3 or Rule 4 or Rule 5 or Rule 6, you don't get baggage exemption for Annex 1 items. Now, if it is Rule 3, 50, 15, Rule 4, 15, 0, only for new articles. Here the categorization is Indian resident, foreigner residing in India, tourist of Indian origin, tourist of foreign origin, tourist of Indian origin and tourist of foreign origin. Here it is by way of air or water, by way of land, by way of land. That's it. Remember this. That's more than sufficient. More than sufficient. Used items, old items, anywhere, unlimited exemption. Unlimited exemption. Infant, they'll not get new items exemption. You cannot tell that there is a husband and wife and a 1 year kid and tell that this 1 year kid requires a phone. Don't do this stuff. But if it is 3 years kid, then you can plan. Then you can plan. If you have brought 3 items, you can tell that this is mine and this is my wife's and this is for my child. You can plan. That planning you can do. Not for an infant less than equal to 2 years. The moment he has crossed 2 years, you can start your planning. You can start your planning. Next, you're talking about your Rule 5. Rule 5 is exemption for jewelry. One very important point that this exemption for jewelry is only applicable for a passenger who has stayed more than 1 year. More than 1 year before his return to India. He went outside India, stayed for more than a year, then he came back. You cannot tell that, no, I went to Dubai. I saw gold at a very lesser price. I thought that I'll take this benefit. I have read Rule 5, but I have not read Rule 5 fully. Because this benefit is only for passengers who stayed there for more than. So without even starting the numbers, I am telling the condition. This is applicable only for a passenger who has stayed there for more than a year and then coming back to India. Obviously, Rule 5 and Rule 6 are extra exemption. I need not tell. Rule 5 is in addition to Rule 3, Rule 4. Rule 6 is in addition to Rule 3, Rule 4. So that is a clarification. Now, what is the exemption that you'll have? What is the exemption that you'll have? Again, they realize the fact that men and women are different. I don't know why people nowadays are confused. Woke culture, wake up, right? High time. Understand that women were always stronger than you. Physically, might be not, but mentally always. They have something with them and you have something with you. Right? Give utmost respect to women because your origin itself is a woman. But at the same point of time, don't do it to an extent that today you will tell that I am a woman. Tomorrow you will wake up and tell that I am a male. No. That culture, let it be there in US. Let this not come in India. Right? That woke culture, if at all you are one among the woke culture, wake up. Now when you talk about the difference, they do realize the fact that there is something which will be different for a gentleman and for a lady passenger. So they understand this fact and they differentiate it. What is the exemption? Who will get more exemption? In India, needless to say. Who will get? Even here, they recognize the fact that women are more stronger than men. They want something more than men. Who will get more exemption? Lady passenger. Who will get more exemption? And that too, it is all about jewelry. That too, we are in the state of Tamil Nadu. We have some history of Tamil Nadu, right? Let us not enter into that. But when you talk about jewelry, it has got deep roots across India. What is the exemption that you get? For a gentleman, 20 grams or don't tell me the market price and all. I am aware. Right. But still, technically it is 20 grams or 50,000, whichever is lower. And 40 grams or 1 lakh, whichever is lower. Please understand that you have to convert it into rupees, then compare. Convert it into rupees, then compare. For example, if you're talking about a lady passenger and if it is given that 50 grams is brought and for a value of say 60 gram, I know that the value is not real that I'm putting, right? Say 50 grams is there for 1 lakh. Pray it will happen, right? Assume that it is the case and it is a lady passenger. What is the exemption? What is the exemption? You just first calculate 40 grams. Now 1 lakh is for 50 grams. What will be for 40 grams? 80,000. Or for lady passenger 1 lakh, whichever is. So what is the exemption? 80. What is the exemption? 80. So what will be the taxable value? You have got jewelry worth 1 lakh. What is the exemption? 80. So what will be taxable? On this 20,000 you will pay customs duty at 38.5. Do not forget conversion. First convert it, compare it, find the exemption, then subtract it from the actual value that you have paid. Clear? Clear? So what is the exemption limit? For a lady passenger, 40 grams of 1 lakh, whichever is lower. For a gentleman, it is 20 grams, it is half rather. 20 grams of 50,000, whichever is lower. Whichever is lower. This is in addition to your rule 3 and rule 4. Just like rule 6, it is in addition to rule 3 or rule 4. Now, what are the other definitions which are given? Baggage includes unaccompanied baggage, but does not includes motor vehicle. We have already understood that it does not includes motor vehicle. We have understood the meaning of resident. A person who's having a valid passport. Personal effects means the items that are required for you for your daily necessities. Personal effects. Personal effects. Because in rule 6 we are going to see something called as household effects. Here it is personal effects for your day-to-day needs. The items are required, that we call it as personal effects. Personal effects. Now, talking about the last computation rule, which is rule 6. Which is your rule 6. So, when you talk about your rule 6, it talks about which situation? It is talking about a scenario where you are transferring your residence. That is transfer of residence. Free allowance to a person who was engaged in a profession abroad or he was settled in abroad and for some reason is coming back to India. Coming back to India permanently. He is coming back to India. Don't you think that when a person is there outside India for a very long time and coming back to India, he should be getting more exemption? He should be getting more exemption. Just like your rule 5, rule 6 is also in addition to rule 3 and it is actually rule 3 plus rule 4, rule 3 or rule 4 plus rule 5 plus rule 6 plus rule 5 plus rule 6. These two rules are additional rules. They are extra exemption. They are not replacing rule 3, rule 4. They are extra exemption. Now, when you talk about your state, as simple as that, understand the logic of rule 6. The more you have stayed outside India, the more will be the exemption. The more you have stayed outside India, the more will be the exemption. If your stay outside India was lesser than 3 months, no exemption in rule 6. No exemption in rule 6. So if your stay outside India was 0 to 3 months, no exemption. 6 months to 3 months to 6 months. More than 3 months, but up to 6 months. More than 6 months in last 1 year. More than 6 months in last 1 year. And finally, more than 1 year during some point, right? During last 3 years. More than 1 year during last 2 preceding years. During last 2 preceding years. And finally, minimum 2 years. Now understand this. If it is 0 to 3, 0. 3 to 6, 60,000. 6 months to 1 year, 1 lakh. Minimum 1 year stay in last 2 years, 2 lakhs. More than 2 years, 5 lakhs. So last case you have to remember. But all the other cases it is very simple. 0 to 3, 0. 3 to 6, now always second digits, 60,000. 6 months to 1 year, 1 lakh. Minimum 1 year in last 2 years, 2 lakhs. More than 2 years, 5 lakhs. More than 2 years, 5 lakhs. This is an extra exemption that you get. So that is a very simple way to remember your amount limit. Now what amount exactly is that? What is the concept therein? In all the cases, there is a common condition that you are talking about Indian passenger, except in the last case where you are talking about any passenger. Basically, the focus is on Indian passenger. Indian passenger. Now, what items that benefit is that? Be it 60,000 or 1 lakh or 2 lakh or 5 lakh. For what? For what? For personal or household effects, used or unused, not including Annexure 1 items, Annexure 2 items, but including Annexure 3 items. I repeat, this time they have added personal effects as well as household effects. Personal effects as well as household effects. Household effects is not for your personal use, it is for common use of your family. Common use for your family. Used or unused. Not including Annexure 1 items and Annexure 2 items. Annexure 1 benefit is not given anywhere. But including Annexure 3 items. Annexure 3 household effects. Annexure 3 household effects. Then remember the limit 60,000, 1 lakh, 2 lakh and 5 lakh. Now please understand. If it is used personal effects, you will never touch Rule 6 because you have unlimited exemption in Rule 3, Rule 4. If it is new personal effects, new items, you will use both Rule 3 and try to plan even in Rule 6 if at all there is a limit available. Household effects, whether used or unused, the only place where you can take the benefit is Rule 6. Right? Be very clear with it. So you are talking about personal effects as well as household effects. Let us categorize that into old, new, old and new. Now if you are talking about personal effects, if it is used, old, you will always go and take the benefit of under Rule 3 because there is unlimited exemption. Personal effects which are new, you will try taking the benefit under Rule 3. If not, and if there is a balance exemption left over in Rule 6, you will try to use Rule 6 as well. That is a possibility. But household effects, whether it is old or new, it is only Rule 6. It is only Rule 6. You can do planning. Right. So if you remember this, you see the question, you get to know that, okay, where I have to use it. But remember, when you are doing planning, one item cannot be split. That particular item value, supposing it is 60,000, you can keep it either under Rule 3 or Rule 6. You cannot tell, okay, left over 10,000 is there. No, that cannot be done. Now, talking about extra condition in last two cases. What are the higher exemption in this entire Rule 6? 2 lakhs and 5 lakhs. For 2 lakhs and 5 lakhs, they have this extra condition that you should not be using this concession once in, you should be using this concession only once in 3 years. Only once in, this is there for your 2 lakhs and this is there even for your 5 lakhs. The benefit of 2 lakhs and 5 lakhs is only once in 3 years. Once in 3 years. This benefit of higher exemption of 2 lakhs and 5 lakhs can be taken only once in 3 years. Once in 3 years. It may be possible that you are eligible. I'll tell an example. You went to USA for 1.5 years. You came back. 1.5 years means you're covered at 2 lakhs. You enjoyed the benefit of 2 lakhs. Immediately after 3 months, you went back to, say, Germany. Then in Germany, you stayed there for another 1 year. You're coming back. If you see the entire back time, you have gone to USA 1.5 years, then stayed in India 3 months, and again gone to Germany for 1 year and came back. Second time, technically speaking, you are again eligible for 2 lakhs exemption, but you will not get. You have to go with 1 lakh. You have to go with 1 lakh. Once in 3 years only, you will get the benefit of 2 lakhs and 5 lakhs. 2 lakhs and 5 lakhs. For 5 lakhs, there are extra conditions. What is the criteria for 5 lakhs, by the way? Your minimum stay should be 2 years abroad. And they have an extra condition that during the last few years, your stay in India should not exceed 6 months. So during your last 2 years, your stay in India should not be more than 6 months. Should not be more than. So you have to remember both. Your stay outside India is more than 2 years. Your stay in India during last 2 years is not more than 6 months. But understand, at times, you may not fulfill both. I'll give you an example. Your stay outside USA was more than 10 years. But during last 2 years, you are in a dilemma whether to permanently come back to India because of your family situation. So you kept coming to India, stayed in India, went back, stayed in India, went back. Which means if you see the last 2 years, 1 year, 6 months you are there in India. 1 year, 6 months you are there in. But your total stay outside India was 10 years. Now don't you think that you are violating this condition? So they give a relaxation. They tell that, okay, principal commissioner or commissioner may consider this and understand that why you stayed in India for more than 6 months in last 2 years because of your family situation, and this may be ignored. Why? Your total stay in US was 10 years. Because of the family situation, during the last 2 years, it happened that you stayed in India for more than 6 months. Another classic example is COVID. COVID can be a classic case. During COVID, you are not sure that you have to be permanently coming to India or not. So you came to India and you settled here for, say, 1.5 years. You are working from home. Work from home option was given to you. But finally, you decided that you will quit the job in US and you will start something of your own in India. So your stay in USA would have been more than 10 years. But if you see the last 2 years, your stay in India was more than 6 months. Don't you think that because of your stay in USA for more than 10 years, when you bring back, you will bring back a lot of items? You require a more exemption limit. Don't you think that you are still eligible for 5 lakhs? Yes. Make an application to Commissioner, Principal Commissioner of Customs, and tell him the situation. He'll relax that condition. He'll relax that condition. What is the main condition here for 5 lakhs? Your stay outside India should be more than 2 years. At times, you will be almost touching 2 years. Almost touching. So this almost touching 2 years, I call it as 22 months to 24 months. Almost touching. So your stay in US is, say, 23 months. Technically speaking, you are eligible for 2 lakhs or 5 lakhs. Your stay in US is 23 months. Technically speaking, you are eligible for 2 lakhs or 5 lakhs. 2 lakhs. But don't you feel that you are feeling a lot? Because you have almost touched 2 years. So what you can do for shortfall up to 2 months, you can make a application to not a higher officer, lower officer, AC, DC, and tell him that please ignore the shortfall of 2 months and give me the benefit of 5 lakhs. Give me the benefit of 5 lakhs. Both are different. What are the two criteria, sir? Your stay outside India should be more than 2 years. And your stay in India during the last 2 years should be less than 6 months. If your stay in India during the last 2 years is more than 6 months, it can be relaxed by Commissioner, Principal Commissioner, because your total stay in US was already more than 2 years. It can be relaxed. But if your stay in US itself is not touching 2 years, but it is almost touching 2 years. What is that? 22 to 24 months. 22 to 24 months. Technically, you are eligible for 2 lakhs, but if you request ACDC and if he is convinced, he can make it 5 lakhs. He can make it 5 lakhs. So that is all about your rule 6. Rule 6. Remember 0 to 3, 0. 3 to 6, 60,000. 6 to 1 year, 1 lakh. 1 year, minimum 1 year during last 2 years, it is not 1 to 2. Minimum 1 year during your last 2 years, 2 lakhs. More than 2 years, 5 lakhs. More than 2 years. In all the cases, the condition is Indian passenger, except in the last case, any passenger. In the last 2 cases, higher exemption, that is the condition which cannot be relaxed. Which cannot be, the benefit of 2 lakhs and 5 lakhs is only once in 3 years. And there are 2 extra conditions and with relaxation that we have discussed for 5 lakhs. So that is all about your rule 6. And when you talk about time pass rule 7, 8 and 9, not so important. They are all basic time pass rules. 7 tells that customs officer has got powers to even check your foreign currency in terms of your FEMA. There is no collection of duty on your foreign currency. He can ask and check your foreign currency whether you are carrying foreign currency within the limits of FEMA. That is rule 7. Rule 8. Rule 8 basically tells that the benefit of all the exemption 3, 4, 5, 6 is only for accompanied baggage. It is not for unaccompanied baggage. It is not for unaccompanied baggage. But it gives them relaxation. It gives a relaxation. What relaxation it gives? If at all your unaccompanied baggage lands in India up to 2 months before the arrival of passenger, which means first baggage, then passenger. First baggage, then passenger. But the time gap is only 2 months plus extension not exceeding 1 year. Not exceeding 1 year. Which means though it is technically unaccompanied baggage, but it came soon. First you have sent the baggage, then you came back soon. See, at times, because of the charges charged by the airline, you have to plan. You will send your baggage, then you will come. So they understand this difficulty and they tell that, okay, we'll be giving you baggage exemption in rule 3, 4, 5 and 6. We'll give you. Rather, technically 5 will not do this. Jewelry will carry. But rule 3, 4 and 6, we will still give you. Because it is understandable. You had sent your baggage and you came immediately within 2 months. If at all it is extension, take permission of ACDC, but total time limit should not exceed 1 year. Now, ulta case, reverse case. First, passenger, then baggage. Now, your unaccompanied baggage is dispatched within 1 month of arrival in India. 1 month of arrival in India. Passenger has arrived. Passenger has arrived. Baggage is coming within 1 month. Obviously, they talk about extension, but there's no upper limit. There's no upper limit. First baggage, then passenger. 2 months plus extension not more than 1 year. Totally not more than 1 year. First passenger, then baggage. It should come within 1 month plus extension. 1 month plus extension can be asked for any reason. The reasons are given below, not important. You can ask for any reasons. You can explain and tell the reasons. Now, time pass, the last of the time pass rules is rule 9, which tells that baggage exemption will not be given to crew members. We will not give baggage exemption to the crew members except at the time of final payoff on termination, which means except at the time of the last travel, which means if I am talking about a crew member, I have resigned that airline or the shipping line. I am coming along with that same airline or the shipping line. At that point of time, I am technically not the crew member, I am technically the passenger. At that point of time, I can take the relaxation. At that point of time, I can take the relaxation because I am more of a passenger than the crew member. I may be still employed, but I am about to leave that job. But during other times, they can get a petty exemption of 1500 for what all nonsense items, chocolates, cheese, cosmetics, other petty gifts for themselves or their family members. So every time when the crew member goes outside and comes in, they can bring small items up to 1500. Any item. It need not be chocolate. I don't know why they have mentioned cheese. It need not be chocolate, cheese, or cosmetics. It can be any gifts. It can be any gifts for themselves or their family member. Right. So you're talking about your time pass rules being 7, 8, 9. What are the main rules? 3, 4 plus 5 plus 6. Now, if you have seen your baggage rules, you'll find that you don't get any exemption for Annexure 1. You don't get any exemption for Annexure 1 items. There is no exemption for your Annexure 1 items in any of the rules. What is Annexure 1 items? Firearms, cartridges of firearms exceeding 50. Exceeding 50. Gold, silver in any form other than ornaments. Bullion. Rather, bullion is a challenged item. Normal people cannot bring bullion. It is to be brought only by notified banks or the government undertakings. MMTC, Mineral and Metal Trading Corporation of India, or notified banks including your State Bank of India, only they can bring bullion. Don't tell me we have clients there, we know that they are bringing bullions. Physically, they will not be showing in the books of accounts. It is all smuggling. Right. So it is gold or ornaments in any forms other than gold or silver in any forms other than ornaments. Ornaments you can bring but not bullion, not the biscuits or not the coins. Cigarettes exceeding 100, more than 100, exceeding 100. Cigars more than 25, or tobacco exceeding 125 grams. Exceeding 125 grams. And comes your alcoholic liquor or wine in excess of 2 liters. In excess of 2 liters. They give a limit. Firearms, cartridges more than 50, cigarettes more than 100, cigars more than 25, tobacco more than 125 grams, liquor in excess of 2 liters. Liquor in excess of 2 liters. Other items, bullion, and you're talking about television, flat panel television. These are all your Annexure 1 items. When you bring these items, few items you can never bring. Bullion you can never bring. Other items, when you bring these items, you have to pay baggage duty. You have to pay baggage duty. You are required to pay. You don't have any exemption. You don't have any exemption. For example, if you bring 3 liters of liquor, 2 liters you can enjoy the exemption in Rule 3 or Rule 4. For that excess 1 liter, you may have your leftover exemption. You may have your leftover exemption, but you are required to pay duty. You are required to pay duty. And out of these items, firearms, cartridges, cigarettes, they will not have 38.5 percentage. They will have their own rate, including goods which are imported by courier. They will not have 38.5. They will have their respective rates. They will have their respective rates for firearms, cartridges, cigarettes and tobacco items. They will have their respective, but liquor, if it is in excess of 2 liters, that excess 1 liter, you will have 38.5 percentage. You will have 38.5 percentage. You will have 38.5 percentage. If it is cigarettes within 100, enjoy Rule 3, Rule 4. Enjoy Rule 3, Rule 4. Only if it is more than 100, that's a problem. And that too, you can tell that for 100, I'll still enjoy Rule 3, Rule 4. Rule excess, you cannot enjoy. And that excess portion for, tobacco items or cartridges or firearms, always understand that customs baggage rate is not applicable for them. 38.5% is not applicable for them. They'll have their respective rate. So always you'll find that ICAE will never test the questions which includes firearms, cartridges, cigarettes. It will ask question. It has asked a number of times a question which includes alcoholic liquor. alcoholic liquor, but not these items. But not these. What about television? Flat panel television? Assume that you went to USA and you went to China and brought only flat panel television. You got nothing else. You have your leftover baggage exemption of 50,000. You cannot use it. You have to pay on the full value of flat panel television at 38.5. All other items will attract 38.5%. Right. This is Annexure 1 items. Annexure 2 and Annexure 3 you go through yourself. Just remember this. Annexure 2 is called as posh household effects. Posh household effects. You don't get the benefit of Rule 6. Both are only talking about household effects. Annexure 2 posh household effects. You don't get the benefit of baggage exemption. You'll end up paying 38.5% always. Annexure 3 essential household effects. You can enjoy the exemption under Rule 6. You can enjoy the exemption under Rule 6. And if it is crossing the exemption limit, then 38.5%. Annexure 1 items. Baggage exemption is not at all allowed, be it Rule 3 or Rule 4 or Rule 5 or Rule 6. Either you will end up paying 38.5% or respective rate in the case of firearms, cartridges and cigarettes. Annexure 2. It is only for household effect. Annexure 2 covers only household effects. Forget about Rule 3. So even in Annexure 2 items, you will not get any baggage exemption. Technically, it has got nothing to do with Rule 3, Rule 4. It has got nothing to do with Rule 6. It had to do with it has got nothing to do with Rule 5. It has to do something with Rule 6, but you cannot take the benefit. You will end up paying 38.5%. And Annexure 3, you can go for baggage exemption. It has got nothing to do with Rule 3, Rule 4. It has got nothing to do with Rule 5. Can you enjoy Rule 6 now? Yes. If it is up to the limit, nothing. If it is more than the limit, if it is up to the limit, don't pay. If it is more than the limit, pay 38.5%. Now, one point I have missed out, which is a very important point. Apart from the exemption that we have discussed, there is an extra exemption for a single laptop. If at all you are bringing one laptop, if you are an adult, two conditions. You are a passenger, not a crew member, and you are an adult more than 18 years of age, then there is an extra exemption apart from Rule 3, Rule 4. Extra exemption. Extra, which means you do not use the limit of Rule 3, Rule 4. One laptop by a passenger being an adult, there is an extra exemption. There is an extra exemption, which means you are not going to base your limit of Rule 3 or Rule 4 or Rule 6. You will have an extra exemption. You will have an extra exemption. And when you talk about a passenger, supposing I am the passenger who is going in an international flight, but my travel is only from Coimbatore to Mumbai. The same flight from Mumbai is going to go to London. Whether I will be giving any declaration form? No. Why? I am traveling only in the domestic leg of the international flight. Domestic leg of the international flight. So I am not required to give any baggage declaration because I am only traveling in the domestic leg of the international flight. And finally, please understand that if at all you have valuation issues in valuing your baggage, valuation rules will be clearly applicable. Valuation rules will be clearly applicable. If at all you find any difficulty in valuing your baggage, your valuation rules are applicable for all the goods including baggage. All the rules including baggage. And specifically when you are talking about your Rule 3, Rule 4, pooling is not allowed. Pooling is not allowed. I have already said this indirectly. One item, one person. Another item, another person. You cannot tell that I have leftover exemption, I will transfer to the other person. Right? Pooling is not allowed. If I am coming along with my friend from USA, for both of us it is 50,000 exemption and 50,000 exemption. I have got an item worth 30,000, my friend has got an item worth 60,000. I have exemption left over of 20,000. I cannot do anything. My friend has used the full exemption. He has got balance 10,000 on which he has to pay duty. On which he has to pay duty. He cannot, my unused exemption, I cannot transfer to my friend. Pooling is not allowed. Pooling is not allowed. That is not permissible when you are going for your baggage rules. And by the way, I say ask questions where you're talking about Mr. and Mrs. spouse, both husband and wife are given, and they will give you all the data. You have to plan, and you have to plan in such a way where the tax liability is minimum. Planning is allowed, pooling is not allowed. You can plan which item to be shown by whom, which item to be shown by whom. Assume my and my friend have gone outside India, and my friend has got goods worth 90,000, 40,000 and 50,000, 2 items. If it is one item, nothing. 2 items, 40,000 and 50,000. I have not got anything. When I come back, we can plan. I can show that 40,000 item under my name, take the exemption. My friend can show that 50,000 item under his name, take the, that planning is allowed. That planning is allowed. Pooling is not allowed. So that's all about your baggage chapter. Now, a very important procedure that we are going to discuss is warehousing procedure. Warehousing, and like all the chapters, first we'll see the bird's eye view of this warehousing procedure in a different format. Now, first thing that you will do when you are going to warehouses, file a bill of entry for warehousing under section 46. Section 46 will have 2 bill of entries. One bill of entry for home consumption, pay and take the goods. One bill of entry for warehousing. There you will not make the payment, you will give a bond, that is warehousing bond under section 59, where the bond value is 3 times the amount of import duty. So section 59, you will give warehousing bond, section 59. And once you give a bond, officer will give you warehousing order, section 60. The moment you get that order, you will take your goods from customs station to customs warehouse. So importer will file bill of entry for warehousing, section 46. Give a bond, warehousing bond 3 times the amount of import duty, section 59. And officer will give you warehousing order, section 60, from where the goods are going to go from your customs station to customs warehouse. And what goods can go to customs warehouse? Only dutiable goods can enter into customs warehouse. Only and only dutiable goods. What do you mean by dutiable goods? Goods on which duty is chargeable but not yet paid. Goods on which duty is chargeable but not yet paid. If the duty itself is 0, can you take the goods to customs warehouse? No. If the duty is 10% but you already paid it? No. The goods on which duty is chargeable but not yet paid. Only dutiable goods can be taken to warehouse. Dutiable goods means goods which are chargeable to duty but duty has not been paid in terms of section 2 clause 14 of your Customs Act. Now when the goods goes at customs warehouse, there are 3 types of warehouse. One is public warehouse, section 57. Second is private warehouse, section 58. And third is special warehouse, section 58A. 3 warehouse, public, private, special, 57, 58, 58A. And all the warehouse comes with the concept of license by commissioner. Customs station are appointed by CBIC, appointment CBIC. Customs warehouse, license commissioner, license. Now, if I don't properly follow the conditions of license, my license may be cancelled. 58B. Whether it is public warehouse, private warehouse or special warehouse, if I don't properly follow the conditions of license, my license may be cancelled. Section 58B. Now, Normally from customs warehouse, what I'll do, I'll either take the goods for home consumption, take to my home, or I'll take the goods to another warehouse, or I'll export the goods from warehouse. So that clearance from warehouse is of three types. One is warehouse to warehouse, section 67. Warehouse to home consumption, which is the main provision, section 68. Warehouse to export, which is section 69. Warehouse to another warehouse, you will not pay any import duty. Warehouse to home consumption, you will finally pay import duty. Warehouse to export, you will not pay any import duty. The goods came inside India, they were undergoing the process of import. Finally, it went out for export. So import never got over. Import, when the goods came inside India, import started. Import was going on. Even when the goods are at customs warehouse, import is going on. And suddenly you export from customs warehouse. Import started, but it never ended. No question of import duty. When you are clearing for the goods for your home consumption, there may be some remission loss on volatile goods which government may forgive. Section 70. There may be some remission loss on volatile goods which government may forgive. So government may not take import duty on remission loss on volatile goods. Section 70. Right. So your outward entries from warehouse are 67, 68, 69. Warehouse to another warehouse, warehouse to home consumption, and warehouse to export. 67, 68, 69 respectively. And when you're clearing for home consumption, only there you pay import duty. That has to be read along with remission of duty on volatile goods. So you may get some remission on volatile goods. So section 68 read along with section 70. Section 68 read along with section 70. Now, when the goods are inside warehouse, this is all about exit. This is all about exit from your warehouse. Exit from your warehouse. Now, when the goods are inside warehouse, you may decide to manufacture in warehouse. There is a facility where you can go for manufacturing in warehouse. It is a customs warehouse. It is not your own warehouse. Customs warehouse, public, private, or special. Here you may decide to go for manufacturing in warehouse. You may take permission and you may manufacture in warehouse. So that is allowed in terms of section 65. Section 65. Look at the provisions. When you are entering, it is section 46 along with 59. Officer will give warehousing order, section 60. When the goods goes to warehouse, there are three types of warehouse: 57, 58, 58A, public, private, special warehouse, read along with 58B, which is your cancellation of license. Then when you are going outside, there are three types: 67, 68, 69. Warehouse to another warehouse, warehouse to home consumption, warehouse to export. And when you are paying import duty, it is only in case of warehouse to home consumption. There you have to also remember remission of import duty on volatile goods, section 70. Section 70. And when the goods are in warehouse, forget about exit now, when the goods are in warehouse, you may be allowed to manufacture in warehouse, section 65. Section 65. And in warehouse, you cannot keep the goods for a long time. You can keep the goods for a particular time called as warehousing period. That warehousing period is discussed in section 61. That warehousing period is discussed in section 61. You cannot keep the goods in warehouse for a long time. Warehousing period. Rather, section 61 period is split into two. One is warehousing period, which is a lengthier period, section 61(1). Warehousing period is normally 1 year. One is interest-free period, which is normally 90 days. If you are keeping the goods in warehouse till 90 days, you can take the goods without payment of interest. You will pay import duty but not interest. If you are clearing after 90 days but up to 1 year, you will end up paying Import duty with interest. Interest will start from 91st day. Interest will start from 91st day. So one, that is warehousing period, which is normally 1 year. No, 1 year. And one is interest period, which is normally 90 days. When the goods are inside warehouse, you cannot keep the goods for a long time. You should know what is warehousing period. Warehousing period is a period till which you can have the goods in warehouse. Interest period is the lesser period till which you can have the goods in warehouse and clear the goods without payment of interest. You just pay import duty, no interest. If you are clearing after 90 days, interest will start from 91st day, normal time limit. Now when the goods are in warehouse, there are rights of various persons. Section 62 spoke about the right of the officer, which is omitted. Now section 62 is not relevant. 63 spoke about the right of warehouse keeper, now not relevant, not there. So there is right of importer, section 64. Please understand that now warehouse is under the control of the warehouse keeper who is taking the license. Public warehouse, private warehouse are fully outside the control of customs. Only special warehouse is inside the control of customs. So now they don't talk about right of any proper officer. Please understand that earlier, if you are not paying to the warehouse keeper in time, you will be paying something to warehouse keeper in time. Then they realize that the contract between warehouse keeper and importer is a private contract. Let them decide what they want. So now they no more talk about right of proper officer, omitted, section 62 omitted. They no more talk about right of warehouse keeper because it is a private contract, section 63 omitted. Now they only talk about right of importer, section 64. 62 and 63 section itself are omitted. Sections itself are omitted. Clear? Then when you are exiting from your warehouse, this is all when you are in warehouse. What is the time till which you can, what is the special thing that you can do in warehouse? Manufacture. Till how long you can keep the goods in warehouse? Warehousing period, interest free period. What importer can do in warehouse? Rights of importer in warehouse. Now when you are exiting from warehouse, either it is proper removal or it is improper removal. If you are going as per these three provisions, warehouse to another warehouse 67, warehouse to home consumption 68, warehouse to export 69, it is called as proper removal. But if you are not clearing the goods in above ways, if you are taking the goods secretly from warehouse, example, it is improper removal. Proper removal, no issues. Improper removal, you will be facing consequences. So removal can be proper removal as well as improper removal. 71, 72. And when you do properly remove the goods and pay the import duty, the bond that you have given earlier will be cancelled. Cancellation of bond, section 73. Section 73. And if you are not properly removing the goods, it is not only responsibility of the importer but also responsibility of warehouse keeper. Why? Now warehouse is not under the customs control. Public warehouse, private warehouse are under the control of warehouse keeper. So if importer has improperly removed the goods, we will take action against importer, but we will take action even against warehouse keeper because we trusted you. So obligation of warehouse keeper, section 73A. If you have removed the goods properly, you pay import duty, interest, penalty, etc. and go and cancel your warehousing bond, section 73. If the goods are improperly removed, then we will take action against the importer. Once he pays it, bonds will be cancelled. But we will not only take action against the importer, we will also take action against the warehouse keeper, section 73A. Section 73A. So this is a bird's eye view of this particular chapter. And different sections are given. For the first time you are seeing different sections in a logical flow. Now let us see each of the provisions one by one. Now in proper sequence. Now, first, what are the three types of warehouse? What are the three types of warehouse? Public warehouse, section 57, private warehouse, section 58, and special warehouse, section 58A. Understand that all the warehouse are licensed by commissioner or principal commissioner. Correct? All the warehouse are licensed by commissioner or principal commissioner. Discussed already. Whether public warehouse, private warehouse is under customs control? No. Public warehouse and private warehouse is not under control of customs. It's not under control of customs. The only warehouse which is under the control of customs is special warehouse, which is under the control of customs. Correct? This was already discussed. So 2 points are already discussed. All the warehouse are running on the concept of license given by commissioner of customs or principal commissioner of customs. And public warehouse, private warehouse are not under customs control. They are under the control of warehouse keeper himself. Only special warehouse is under customs control. Only special warehouse is under customs control. Now, what is the difference between public warehouse, private warehouse and special warehouse? The main difference. In public warehouse, you can keep dutiable goods of any person. Supposing a public warehouse is run by Reliance Limited. So Reliance Limited has to keep dutiable goods of any person, be it belonging to Reliance Limited, be it belonging to Tata Limited, be it belonging to Adani Limited, be it belonging to any company, ITC Limited. So when there's a public warehouse run by a particular person called as say Reliance Limited, it has to keep dutiable goods of any person. Now, what is private warehouse? Automatically you'll understand. If private warehouse is run by Reliance Limited, dutiable goods only of Reliance Limited will be kept in that private warehouse. Dutiable goods only of Reliance Limited will be kept in that private warehouse. Public warehouse run by Reliance Limited, it has to keep dutiable goods of all the persons. Private warehouse run by Reliance Limited, it can keep only dutiable goods only belonging to Reliance Limited. Basically, private warehouse is required when you want to opt for section 65, manufacturing within warehouse. So when you are talking about section 65, manufacturing in warehouse, this is possible only when you opt for private warehouse. It can be taken for other purpose also, but generally whenever you go for manufacturing in warehouse, for sure it is a private warehouse. I am not telling private warehouse is only for manufacturing purposes. It can be only for storing purposes also. But if you want to manufacture in warehouse, for sure you will be going for your private warehouse. You will be going for your private warehouse. Right. Now, what is then special warehouse? Special warehouse is a place where you can keep only notified dutiable goods of any person. In above 2 points, any dutiable goods, but here it is only notified dutiable goods of any person. Now, what are the notified dutiable goods which are kept in special warehouse? You will easily understand it. What are the notified dutiable goods? First, the notified dutiable goods are gold, silver, precious metals and semi-precious metals. Jewelry sector. Gold, silver, precious metals and semi-precious metals. Second, goods which are warehoused for the purpose of duty-free shops in customs area. They are there for the purpose of duty-free shops in customs area, which will be used only for international passengers. Correct? Which will be used only for international passengers. Or the goods which are supplied as stores to foreign going vessel aircraft. Which will be supplied as stores to foreign going vessel aircraft. Or the goods which are to be supplied to foreign diplomatic mission or consular post, foreign privileged persons. Understand that in all these three cases, when the goods are at duty free shop, or when the goods are to be supplied as stores to foreign going vessel or aircraft, or when the goods are to be supplied to foreign privileged persons, that is foreign diplomatic mission and consular post. In all these three cases, they don't want import duty. They don't want import duty. They'll tell that, okay, we understand your special purpose. You are going to keep these goods for selling in duty-free shops. So in duty-free shops, which will be in international airports after a particular point, right, which is only accessible for international passengers who are leaving India, Please understand that the goods came inside India, but they are going to be kept at duty-free shops in international airports, and from there who will purchase the goods? International passengers who are going outside India, no import duty. No import duty. No stores to be given to foreign going vessel aircraft. For stores, if you pay import duty when you give to foreign going vessel aircraft, you have to go for duty drawback. Correct? On stores, if you pay import duty when you import and if you then sell it to foreign going vessel aircraft, duty drawback. Better option is stores you bring in India, don't pay import duty, keep it in special warehouse, give it to foreign going vessel aircraft. When you don't pay duty, there is no question of what is the better option? Pay import duty, get duty drawback, or no import duty, no duty drawback. So when you are very clear that they are to be supplied to foreign going vessel aircraft, why are you clearing in India? Why are you paying import duty? When you are going to supply again, you will get duty drawback. So better what to do? Import that stores. Don't clear it. Take it to special warehouse. Import duty is not yet paid. Give it to foreign going vessel aircraft. You never paid import duty. There is no question of duty drawback. And the last category, supply to foreign privileged persons. You are going to supply to whom? Diplomatic agents or carrier consular posts. Diplomats. Now when you are give to them, they tell that we don't want to collect any duty. The same relaxation is there in GST as well. We don't want to have any duty. So what to do? Why to clear these goods, pay import duty and sell to them? Then they will get the goods with duty. Better keep it in special warehouse. Import duty is not paid. Give it to foreign privileged persons. They don't get any duty burden. So the first point is for security purposes. Why gold, silver, precious metals, semi-precious metals are kept in special warehouse? Security purposes. They are very expensive. Security purposes they are kept. In the first point, I have not written no import duty. First point they are kept in special warehouse for security purposes. Second point they are kept because if at all finally they don't want to have import duty, what is the better option? Why to clear the goods? You have imported the goods, but why to clear the goods? You keep it in. You are very clear that you are going to give the goods to duty-free shops. You are very clear that you are going to give the goods as stores to foreign going vessel aircraft. You are very clear that you are going to sell the goods to foreign privileged persons. So why to clear it and pay import duty, then go for duty drawback? Better don't clear it, don't pay import duty, take it to special warehouse. From there, give it to duty-free shops or stores to foreign going vessel aircraft or give it to foreign privileged persons. So import duty will never ever be suffered. So here it is for security purposes. Here it is for no import duty purposes. Now you clearly know the difference between public, private and special. Anyone asking you any question in this area will be very clear. Public, any dutiable goods, any person. Private, any dutiable goods, but only of the licensee. Special, notified dutiable goods, 1 plus 3. Notified dutiable goods, 1 plus 3 of any person. And your entire concept of warehouse, that is, we are done with 57, 58, 58A. Public, private, special warehouse. What is 58B?
What is 58B? You're talking about cancellation of license. So there will be cancellation of license, but during the process of cancellation, there will be suspension of license. During the process of cancellation, there will be suspension of license. Now, why will there be cancellation of license? Why will there be cancellation of license? Cancellation of license will be because of what? If at all licensee contravenes the provisions of law or conditions of license, then the principal commissioner may cancel the license, but after giving principle of natural justice. Now, during principle of natural justice, during the pendency of inquiry of cancellation, principal commissioner or commissioner may suspend the license. We have understood this in GST itself. Cancellation will not happen immediately. Cancellation will start and cancellation will end. There will be some proceedings going on. During the pendency of proceedings, there may be suspension. Why cancellation happens? You have contravened the provisions of the law or conditions of the license. Principal commissioner or commissioner tells that we are cancelling your license, but after principle of natural justice, we'll be having a inquiry. During that inquiry, principal commissioner or commissioner may suspend the license. Now, what is the difference when you talk about suspension and cancellation? If it is suspension, so first what will happen is cancellation proceeding starts, but suspension will happen. Finally, only you'll have cancellation order. So first there will be suspension order, only then there will be cancellation order. I'm not talking about starting point, I'm talking about the end point. Now, during suspension, no further goods can be deposited in warehouse. Already existed deposited goods, warehousing provisions you can continue, but further goods shall not be deposited. Suspension means already some goods are there, you please carry on, but further goods stop depositing. Now, cancellation will be more serious or less serious? Cancellation will be more serious or less serious? So, after cancellation, within 7 days plus extension by proper officer, transfer all the goods which are there in your warehouse to another warehouse, or ask the importer to clear the goods for home consumption, or ask the importer to export the goods. Please ask him. Inform all the persons whose goods are kept, either to take the goods to another warehouse or take it for home consumption or export it. Within how much time? Which means warehouse should be emptied. Already deposited goods also, warehouse should be emptied, but till the goods are there in the warehouse provisions will apply. As long as the goods are there in warehouse provisions will apply. But that's a clear-cut difference between your suspension and cancellation. What is that? Suspension means further depositing is not allowed. Already deposited goods, not to worry. Cancellation means further depositing is anyways not allowed, but already existing goods. 7 days plus extension by officer. Please contact all the persons, all the importers, ask them to take this goods to another warehouse or clear it for home consumption or export it. So that is all about section 58B. So section 57, 58, 58A about public, private and special warehouse. 58B is cancellation. Now, you're talking about what? 59 and 60. 59 and 60. Section 59 talks about what? Warehousing bond. When importer is filing bill of entry for warehousing under section 46, he has to give a warehousing bond. So, when importer is filing bill of entry under warehousing, bill of entry for warehousing under section 46, that will be along with the warehousing bond under section 59. After importer files bill of entry for warehousing under section 46, gives a warehousing bond under section 59, officer will give warehousing order. Importer will give warehousing bond. Warehousing bond, how much is the value? Warehousing bond, how much is the value? 3 times the amount of import duty. 3 times the amount of import duty. So whatever import duty is there as of now, you compute that import duty and multiply it by 3 times, give the warehousing bond. That's something called a tentative assessment, which we'll not understand now. We'll take it at right time. You give a warehousing bond 3 times the amount of import duty. And please understand that bond in GST law or customs law is always along with security. Bond just like that is not of any use. It is just like mother promise, father promise. Normal promise will not be sufficient. Bond will be along with surety or security. Now no law prefers surety, so bond is generally along with security. Bond is generally along with. Why are you giving a bond? The purpose of giving the bond is telling that I will comply with the law. I'll pay import duty with interest if required. And if at all there are any penalties and fines, I'll also pay that. You are promising that I will comply with the law. I will pay import duty and interest. If at all there is something wrong that I've done, I'm promising to pay penalties and fines as well. Now, understand that there are 2 special points of bond. 2 special points of bond. First is, supposing importer 1 brings the goods to warehouse, but the title is transferred to importer 2. So it is importer 1 who has taken the goods from customs station to customs warehouse. But when the goods are at customs warehouse, title is transferred, sale happens. So who has filed the first bill of entry? What was the first bill of entry? Bill of entry for warehousing under section 46, given along with bond, which is 3 times the amount of import duty, was filed by importer 1. But who is going to file second bill of entry? Who is going to file second bill of entry? Second bill of entry for home consumption under section 68, where there will be payment. Will be filed by whom? Who is the real importer? So who is going to pay the duty? Now look at the problem. Bond is of whom? Bond belongs to importer 1. So bond is always along with security. Bond is of importer 1, but who is going to make the payment of duty? Now, if importer 2 does anything wrong, bond of importer 1 will be used. So at the time of sale, what should they do? Importer 1 will ask importer 2 to give a new bond to the customs officer, and he will get back his bond, cancel his bond. So this provision tells that just because you have transferred your title, automatically nothing will change. So even if the title is transferred, importer 1, we can use your bond. But if you want to escape, what you do? Ask importer 2 to give a new bond, then you cancel your bond. If you don't do this process, then we are sorry. We will use your bond. Now if you read this, it will make sense. Bond is enforceable even if there is transfer from one warehouse to another warehouse. If you take, same importer takes the goods to another, this is a very common point. Same importer 1 takes the goods from one warehouse to another warehouse. Bond is still valid because he is still the owner. So this is a very common point, nothing to focus more. But what is special point? Even if the goods are transferred to importer 1, changes the title, gives the title to importer 2. Even then bond of importer 1 can be used. Whether the warehouse changes or whether the person changes, bond still will remain intact. Bond still can be used. If you want to escape that, what you have to do? Ask the next person, ask the importer to transfer it to execute a bond. If you do that, then government is ready. Proper officer will release your bond. So if the transfer of title is there. If there is transfer of title, when the goods are at customs warehouse, bond executed by importer 1 will still be usable. If importer 1 wants to tell that why should you use my bond, now the liabilities of importer 2, he is going to pay import duty. Government will tell her nothing doing. You brought the goods to warehouse, your bond is still usable. If importer 2 does anything wrong, we can still use your bond. How to escape that? Importer 1 should ask importer 2 to execute a new bond, then his bond will be released. Then his bond will be released. If he is not doing this process, though the liabilities of importer to pay import duty, bond of importer 1 is enforceable. This is the point. Right? This is the first point. Now, second special point. These are all two special points. The rest all we have completed in the beginning itself. What is the second special point? Supposing you are talking about importer 1. Importer 1 taking all the goods from customs station to customs warehouse. Right? He is planning to import 1 lakh units. 1 lakh units. But as of now, he has imported and taken the goods in customs warehouse, which is only 20,000 units. So how much he has imported? 20,000 units. So he will be filing bill of entry for warehousing under section 46, basically only for because import is only of, but and bond will also be of, import duty on 20,000 units multiplied by 3. Correct. But if this importer 1 is very clear that even the balance units that I am going to import, I am going to take to warehouse. So what he can do? Instead of this normal bond, he can give a general bond. What he can do? He can give bond of import duty on 1 lakh units multiplied by 3 along with bond is always along with security. So rather than giving bond only for currently imported goods, now you are giving bond for currently imported goods plus goods which are to be imported. This is called as general bond. What is the advantage of that? Need not execute bond when balance 80,000 units are coming. What will happen in this general bond concept? When balance 80,000 units are imported and they are taken to warehouse, again you will not be giving any bond. The simplified process. Again you have to execute a bond. You are very clear. Now you are importing 20,000 units. Later on you will import 80,000 units. So what you can do? Instead of giving bond which is only for currently imported units, you might opt to give bond which is for currently imported units 20,000 plus goods to be imported. So you are not giving bond for only 20,000 units, import duty on 20,000 units multiplied by 3. You are giving bond on 1 lakh units import duty multiplied by 3. So that when you are actually importing the next 80,000 units, you can take to warehouse without giving any further bond. It's only simplification of process. You can give bond in advance. For the currently imported goods and the goods to be imported. When you will do that? Because you know that balance remaining goods which are to be imported, they will also be taken to warehouse. Right. So you can go for a general bond, consolidated bond for the goods which are imported and expected to be imported within a specified period, executed by the importer. If proper officer allows the same, you will tell that next time when I am importing the balance number of units, I will take the goods to warehouse, but bond is already given. I will not give a separate bond. I will not give a separate bond. That is the reason it is called as general bond. General bond. Once you understand everything about the bond, what will happen? Importer will file bill of entry for warehousing under section 46 and give a warehousing bond which is 3 times the amount of import duty along with security. Officer will give warehousing order. When officer gives warehousing order, the goods will go to, the dutiable goods will go to from custom station to customs warehouse, and the procedural part can be given in regulations. CBSE can have regulations how things will happen. Conceptual part is simple. When this is happening, customs, the goods will go from, the dutiable goods will go from custom station to, only after getting warehousing order, the dutiable goods will go from custom station to customs warehouse. What procedure has to be followed, etc., etc., that can be there given in regulations. Now, the most important of all the provisions, is warehousing period. Till how long you can have the goods in warehouse. See, if you see the provisions 57A, 57, 57, 58, 58A and 58B, types of warehouse and cancellation of license. Then 59, warehousing bond. 59 will not come alone. It is bill of entry for warehousing under section 46 along with warehousing bond under section 59. Then followed by section 60, warehousing order. Officer will give warehousing order. Then 61, period. As discussed earlier, you have two period. One is the warehousing period under section 61(1). Till how long you can keep the goods in warehouse. And one is interest-free period. One is interest-free period, section 61(2). Section 61(2). Warehousing period and interest-free period. Warehousing period and interest-free period. What is the warehousing period? Period till which the goods can be kept in warehouse. Interest-free period till which no interest is payable. Now, if at all you are talking about special persons, 100% export oriented units, electronic hardware technology park, software technology park, or manufacturing in warehouse. Section 65 case is nothing but manufacturing in warehouse. There is no time limit of warehousing period and interest-free period. You can keep the goods in warehouse till they are cleared or consumed. Till they are cleared or consumed. And interest-free period, interest will not be there because you can keep the goods in warehouse till they are cleared or consumed. Which in simple language means that for them, EOU, EHTP, STP and manufacturing in warehouse, section 65, no time limit, neither warehousing period nor interest-free period. They can keep the goods in warehouse for how much time they want. All they have to do is properly use it. Right, that conditions will be there. No warehousing period. They can have the goods inside the warehouse till it is cleared, sold or consumed, manufactured. Till it is cleared, sold or consumed, used in manufacturing. You can have the goods in your warehouse. No time limit. Neither warehousing period nor interest-free period. No time limit. So we are not talking about special cases. Our focus is only on normal case. In a normal case, what is the warehousing period? Warehousing period is 1 year. Any goods, whether it is capital goods or other goods. Earlier difference was there between capital goods or inputs. Now any goods. The time limit is 1 year from the date of warehousing order. From the date of warehousing order. Interest free period is 90 days from the date of warehousing order. 90 days. 90 days. If you recall, this was the exact time that we wrote in the bird's eye view. 1 year, 90 days. 1 year, 90 days. 1 year and 90 days. But please be careful in calculating the time limit. Warehousing order is given on 10th of April and goods are actually deposited in warehouse. The goods, after giving warehousing order, the goods will be taken from customs station to customs warehouse. Correct? The goods are actually deposited in warehouse on 15th April. The time limit of 1 year, which is warehousing period, and the time limit of 90 days, which is interest free period, starts from warehousing order and not from the date when the goods are deposited in warehouse. If at all I am ICI, I'll be very interested to give this confusing point. Warehousing order on 10th April. Goods are actually deposited in warehouse on 15th April. This 1 year time limit or 90 days time limit, warehousing period or interest free period, will start from warehousing order under section 60 and not from the date when the goods are deposited in warehouse. Be very clear on it. Be very, very clear on this particular fact. Are you guys clear with this understanding? Are you guys clear with this understanding? Can the warehousing period be extended? Yes. Your warehousing period can be extended by principal commissioner or commissioner, not more than 1 year at a time. So the warehousing period is 1 year plus maximum 1 year plus maximum 1 year. It can be extended every time, but not more than 1 year at a time. So it is 1 year plus max 1 dot. Right? Can it be reduced? Yes, it can be reduced, but wait. Principal commissioner or commissioner will reduce it only when the goods are likely to deteriorate. So reduction normally will not happen. Reduction will happen only when the goods are likely to deteriorate. The goods are such that they are likely to deteriorate. Otherwise, reduction not possible. Extension possible for any sufficient reason. Extension is possible, but reduction not possible. And normally interest free period is same. Whether extension is there or not, interest free period is always the same. 90 days. Obviously, CBSE can reduce or increase at times, but not relevant for exams. Warehousing period can be extended for any sufficient reason, not more than 1 year at a time. It can be reduced in very, very rare case by principal commissioner or commissioner, but the goods are likely to deteriorate. So this increase of warehousing period, this extension of warehousing period, or your reduction is only by principal commissioner and commissioner. Interest period can also be, technically speaking, if you see the provision, interest free period can also be increased or decreased, but not by principal commissioner. It can be done by CBSE, higher authority. Higher, normally it doesn't happen, but it can be done. Theoretically, it can be done by CBSE. Now, what will be the import duty which is payable? So, your import duty which will be payable is what? Your import duty which will be payable is based on exchange rate, first bill of entry, rate of duty, second bill of entry. Rate of duty, second bill of entry. And if you are clearing after 90 days, it will be import duty multiplied by interest rate in customs multiplied by interest rate in customs 15% per annum. Period. 91st day from the date of warehousing order, not actual deposit. 91st day from the date of warehousing order, not the date of deposit in warehouse till the date of payment. Now let us understand this very clearly so that you are very clear with your practical questions. The goods are going from customs station to customs warehouse. From customs warehouse, the goods are cleared for home consumption. When the goods are going from customs station to customs warehouse, let us take this date as we have filed bill of entry for warehousing under section 46. The section 46, say on 10th of April. Then you are filing bill of entry for home consumption under section 68, say on 10th of December. 10th of December. Assume that you have got warehousing order on 15th of April and deposit in warehouse happens on 20th of April. Clear? Clear? When the goods are entering the warehouse, the rate of duty is 10%. When they are exiting the warehouse, the rate of duty is 20%. When the goods are entering the warehouse, the exchange rate by CBIC is rupees 70 per dollar. So whenever I am writing exchange rate, it is exchange rate by CBIC. I am not going to write RBI or FedI. When they are exiting, let us say rupees 75 per dollar. And assessable value is, see, $1 lakh. And basic assessable value is, say, your basic assessable value is, say, $1 lakh. Yes. Now calculate. When this bill of entry for home consumption is filed under section 68 on 10th of December, payment is also made. Here payment was not done. Here bond was given. What is the value of bond? Question number 1. What is the value of the bond? 3 times the amount of import duty. What is this import duty? $1 lakh multiplied by exchange rate is always first bill of entry. Rate of duty is always second bill of entry. Second bill of entry. Correct? Exchange rate is 70 and rate of duty is 20. So your value will be, when I tell 3 times, it is 3 times import duty, value will be 70 lakh rupees multiplied by what percentage? No, 10%. Because you will not know that it is going to be 20% later. So for bond purposes, you will do something called as tentative assessment. Tentative assessment. Why? Why? Because the rate of duty you should have taken as 20%, but when you are executing bond, you are executing this on 10th April. You don't know what is going to be the rate. You are not an astrologer to know the rate which is going to come later. So you will go with 10%. Right rate is 20, but still you will go with, because you are going with the current rate, it is called as tentative. It's called as tentative assessment. What will be the answer? 3 times 70 lakhs multiplied by 10%. 3 times 7 lakhs, which is 21 lakhs. Clear? 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 So initially when there was something written as tentative assessment, I said you will not understand anything now. Now you know the concept of tentative assessment. As rightly said, exchange rate is first bill of entry, $70, but rate of duty is second bill of entry. But you cannot take 20%. Why? This 20% you don't know today. This you will come to know later. But when is bond executed? Bond is executed today. So you cannot wait for that 20% to come. You don't know. You are going to execute bond when? 10th April. On 10th April, the rate is 10%. You don't know what is going to be the rate later. Are we clear with this concept? Now, this is all about your bond. Now, what is going to be the payment? What is going to be the payment of import duty? I am sure you will be very clearly giving the answer. What is the assessable value? What is the assessable value? $1 lakh. What is the exchange rate? Exchange rate is first bill of entry. What is the rate of duty? Now you know the correct rate of duty. Now you know the correct rate of duty. So you'll go with, now you know the correct rate of duty. At the time of payment, you do know the correct rate of duty on 10th December because you are going to pay now and you know the correct rate of duty. So you'll go with the right rate, 20%. So what will be the amount? 14 lakhs. Correct? This is a bond along with, bond is always along with security. Now this is a payment. This is the payment. Clear? Now what is the interest portion? When you are going to pay, you are going to pay import duty, you are also going to pay interest. You are going to pay import duty, also you are going to pay now interest. Interest will be on what? What is the value? Import duty multiplied by 15% multiplied by period. Correct? What is the import duty? 14 lakhs. Multiplied by what is the rate of interest? What is the period? When 90 days will get over? Your 90 days will start from warehousing order or depositing in warehouse. So your 90 days will start from 15th April. 15th April. So April will have balance 15 days. May 31. June 30. July. Wait. We are going to wait only till 90 days. 90 days. So July 14. So your 90 days gets over on 14th of July. So interest will start from 15th July till 10th December. 15th July to 10th December. July will now have 17 days. 15th July, we will count 15th July also. You will count 15th July because 14th July ends on 90 days ends on 14th July. So you will count 15th also. You will count 15th also. Normally you don't count the first date, but in this case we have already ignored the first date. Right? You will count 15th also. So July will have 17, August 31, September 30, October 31, November 30, December 10. So 120, 130, 140, 149 days. So 14 lakhs multiplied by 15% multiplied by 149 days. 85,000? 7? 26. So interest will be on import duty multiplied by 15% multiplied by period. How you found out the period? 90 days from the warehousing order which ends on 14 July. So interest will start from 15 July. Count 15 July also. Unlike other cases, here count 15 July also till 10 December, which is 149 days. Now you get to know entire working of your bond as well as import duty payment as well as interest. How to work out the value of the bond 3 times the amount of import duty. How to work out that? That is based on the current rate, not the right rate. Current rate, not the right rate. Later on rate, because you know only the current rate, tentative assessment. Then you know the calculation of payment of duty, exchange rate, first bill of entry, rate of duty, second bill of entry. Now you know the current rate also. And then interest will be on import duty at 15% starting from 91st day of warehousing order, not the date of deposit in order. It doesn't start from when you filed bill of entry for warehousing. It starts from warehousing order. So everything we have consolidated into one master question. And when you talk about 62, 63, they are omitted. There is no right of proper officer. There is no right of warehouse keeper. Right of importer. What importer can do? Importer can do only following cases. Rights of importer section 64. Only the following cases. He can inspect the goods. He can deal with the containers to prevent loss or deterioration or damage. He can go and inspect the goods. He can deal with the containers in order to prevent further loss or damage or deterioration. He can sort the goods. Good goods and the goods which are already damaged. He can sort the goods and he can show the goods for sale, which means he has to bring the prospective buyer and show. He cannot take out. He has to bring the prospective buyer and show. What he can do? He can go and inspect. See if the goods are proper. If there are some damage related goods and other goods, sort the goods. And after sorting, he can change the containers, deal with the containers in order to prevent further loss, deterioration or damage. And once it is done, he can also bring a prospective buyer and show it. And this is all on a payment of prescribed fees. It's not free. It's all on payment of prescribed fees. But importer cannot do anything more. He can do only these 4 activities. That is given in section 64. There is no more right of officer. There is no more right of warehouse keeper. And when you're talking about clearance, what are the clearance mechanism? Very basic mechanism. What are the 3 clearance mechanism? Either he will transfer the goods to another warehouse. When he is transferring the goods to another warehouse, transferring will not attract any import duty. Transferring will not also extend the warehousing period. Just because you are taking to one more warehouse, your warehousing period will not increase. It is going to be the same. And transferring will not change anything with the to do with the bond. Bond will still remain valid. All these points are either discussed or very normal. You are transferring to goods to another warehouse will not attract import duty. No import duty we have discussed in the bird's eye view. And it is not going to increase your warehousing period. It is not for each warehouse. For all the warehouse put together, warehousing period. For all the warehouse put together, interest free period. And your bond will still remain valid. Just because you have transferred the goods to another warehouse, bond will not be released. Bond will still remain valid. Clearance of goods. Section 68. Which means the main thing, what are you going to do from warehouse? You are going to file a bill of entry for home consumption, pay the import duty with interest and penalty. Officer will give a clearance order. And this we have already discussed in your exception to charging section. Can he relinquish the title when the goods are in customs warehouse. Relinquishment of title is allowed when the goods are in customs station as well as in customs warehouse. Same point. If you recall, relinquishment of title was discussed in section 23, subsection 2 for customs station and section 68 for customs warehouse. Same points. When I am relinquishing the title, should I give any reasons? Is it my right or permission? Right. But if I have committed an offense under any law, if I have committed an offense, I cannot even go for relinquishment. Relinquishment will relieve me only from my import duty, not from other charges. Not from all these points you have already covered in your charging section. Levy of customs duty, this is all it's covered in your charging section. Levy of customs duty. And one more option I have. Directly from customs station I can export. What is the things that I have to take care? Directly from customs station I'll file shipping bill or bill of export. Normally it is shipping bill or bill of export. If it is post, I'll just give a form. That is discussed in post chapter. So normal, what is the document for export? Shipping bill or bill of export that I'll give. Then export duty is very rare, but it may be there. Normally export duty is very, very rare. So this export duty is very, 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 very rare, but it may be there. So normally there's no export duty, nothing will happen. And officer will give me late export order and I'll take the goods. The most important point here is the goods started, import started. Import started when the goods were brought in India, import started. When the goods were taken in customs station, import went on. When the goods were transferred to warehouse, import went on. But import never ended. Very special point. Import started, but import never ended. Therefore, you will never ever have import duty. You will never ever have import duty. You will never ever have import duty. And whenever you're talking about export, this is a very common point. Whenever you're talking about export, if the goods are likely to be smuggled back, which means government doubts that actually export is not happening. It goes to Nepal and it's going to come back. So actual export is not happening. They're just showing it to make it tax free. Then they will tell that no, we will not allow clearance without import duty. We will treat it as import. You pay import duty. You export the goods. Give us the proof that export happened. We'll give you duty drawback. We'll give you, or clearance will be possible only after fulfillment of certain conditions. Okay, we will not collect import duty, but give us the proof that actually the goods went to Nepal, Bhutan or some neighboring country. This is very common in export to neighboring countries. Whenever government feels they are likely to be smuggled back, they don't give you benefits. They don't give you benefits. So the moment government feels the goods are going to go to Nepal and again come back. Look at the irony. Government did not collect any duty, but the goods now are in India duty free. Duty? Government will, no, nothing doing. You pay import duty. You pay? We will treat it as import. You pay import duty. You take the goods to neighboring countries, give the proof that export happened, we'll give you duty drawback. Or we will allow you not to pay import duty, but you give us a solid evidence that the goods actually went to Nepal, Bhutan, etc., etc. If you are not able to give the proof, we will collect import duty with interest. So smuggling, whenever this export is happening, if at all government fears smuggling, they will withdraw the benefits. They will withdraw the benefits, or they will give the benefits with certain strict conditions. So that is all about 67, 68 and 69. And when you talk about 70 is nothing but remission on volatile goods. Don't you think that goods will be there in warehouse for a long time? Goods will be there in warehouse for a long time. When the goods are in warehouse for a long time, there can be evaporation loss, remission loss, right? So if the goods are found to be in warehouse and they are deficient in quantity, which means 1000 liters came inside warehouse, but only 990 liters is cleared, deficient in quantity on account of natural loss, then ACDC may remit the duty on the same. How much liters you brought inside warehouse? 1000 liters. How much you are taking away? 990 liters. Technically, you should pay import duty on entire 1000 liters. But ACDC may remit the duty on 10 liters. But wait. First, it should be deficiency in quantity only and only because of natural loss. Second, it is only allowed for notified goods. What are the notified goods? Petroleum products kept in tanks. Liquid helium gas kept in containers. Wine, spirit, beer kept in cask. Crude kept in caverns. Big cave type containers. Caverns. Look at the way notified goods are given. They have not given the notified goods. They have said that notified goods properly stored, in spite of properly storing it, there is some evaporation loss. We'll help you out. We will help you. If you have just kept petroleum products open, then there is an evaporation loss. We are not ready to help you. You should have kept petroleum products properly in tanks. You should have kept liquid helium gas properly in containers. You should have kept wine, beer and spirit properly in cask. You should have kept crude properly in caverns. In spite of properly storing in proper containers, if evaporation loss happened, we are ready to help you out on remission loss of volatile goods. We will not take import duty. What are the 2 points, 2 conditions? First, it is natural evaporation loss. Natural evaporation loss, not of any item. 4 notified items kept properly in proper containers. Petroleum products in tanks, liquid helium gas in containers, wine, spirit, beer in cask, crude in caverns. These notified goods properly kept. In spite of these notified goods properly kept in containers, if there is some evaporation loss, we will not collect import duty. We will not collect import duty. And I have given a differentiation chart so that you guys can actually differentiate. There is something called as remission under section 23(1), which is there for goods kept at customs station as well as customs warehouse, and there is something called as section 70 remission, which is there only for goods kept at customs warehouse. Both are remission. Both you have to beg and they will forgive. What is the difference? Section 23 remission is for about loss or destruction on account of any reason. Loss or destruction on account of any reason. On account of any reason. But here it is natural loss in quantity only due to natural loss. The loss is only due to natural loss. That is loss or destruction, any reason. Here it is only natural loss. What is the coverage there? 23(1). Total loss or major loss, correct? Total quantity loss or major quantity loss. But what is the coverage here? Natural loss will cover only small quantity. Why? You are talking about notified items kept in notified containers. In spite of that, some loss is happening, which will be small or big? Smaller. Which will be smaller. Here, any goods in any state are covered. Any goods in any state, whether it is solid state, liquid state, gaseous states. Here, only notified goods, not any goods rather. Here it is actually any goods in any states. Here it is only notified goods, that too in liquid, gas or gaseous states are covered. That too only in liquid state or gaseous state are covered. Differentiate. 23 scope is wider and 70 scope is smaller. 23 talks about remission at customs station, customs warehouse. 70 only remission and warehouse. 23 talks about loss or destruction, any reason. Here it is 70, it's only natural loss. 23 talks about total quantity or major quantity is lost. Here it is small quantity. 23 talks about any goods in any form. Here it is notified goods. 4 notified goods in solid, in liquid or gaseous states, that too kept in proper containers. That too kept in proper containers. That's the difference. That's a difference. Are you guys clear with this understanding? Are we guys clear with this understanding? You can Also remember in this way, if there is pilferage loss at customs station, you get the benefit only and only at customs station. Small quantities, correct? Small quantity loss only at customs station. Likewise, if there is natural loss at customs warehouse, which is allowed only at customs warehouse, again it is there in. So at least for remembrance purposes, obviously both are very different. One benefit is allowed only at customs station. What is that? Pilferage loss at customs station, and that is also in small quantity. But understand that pilferage loss is your right, whereas this is not your right, it is request. It is request. Here it is natural loss at customs warehouse, and here it is very restrictive, not for any goods, only for 4 notified goods kept in proper containers. But on a broader perspective, there is a replacement given. There is a replacement given. Natural loss at customs warehouse, only at customs warehouse, small quantities. But here obviously you are talking about right, and it is any goods. Right, and it is any goods. Here it is permission, and it is only notified goods. So here we are talking about right of the importer for any goods. Here we are talking about request by the importer only for notified goods. If at all I want to differentiate that. Right, so that is section 70. When you will read section 70, when you are clearing the goods for home consumption, when you are paying the import duty, you will read it along with section 70. On small quantity, you may not pay the duty. On small quantity, you may not pay the duty. 71 and 72 are very basic stuff. What is 71? Properly remove. What are the 3 types of proper removal? Transfer to another warehouse, section 67. Take the goods for home consumption, section 68. Export the goods, section 69. Proper removal. Now what is improper removal? What is improper removal? Section 72. You have removed the goods but not in terms of section 71. Which means you have done removal but not in terms of warehouse to warehouse, warehouse to home consumption, warehouse to export secretly. You have taken out the goods secretly. Or you have not removed the goods within warehousing period. See here, you have secretly removed the goods. Here, you have not at all removed the goods within warehousing period. Or you have not accounted the goods properly. This happens in case of private warehouse. Your record shows that 1 lakh units should be there in warehouse, but physical quantity is only 95,000 units. So either there is secret removal. You have removed the goods not as per section 71, secret removal. Or you are not at all removed the goods. You are lazy enough. You have kept the goods in warehouse itself. That is also improper removal. It is not removed but improper removal. It is not removed but deemed to be improper removal. Very important point. We will be using later. Not removed but improper removal. Or you have not accounted the goods to the satisfaction of proper officer. It happens in private warehouse where quantity as per record is 1 lakh units, but actual quantity inside is 95,000, which means 5,000 units are not properly accounted. Shortage, you pay import duty with interest and penalty. If any of the above happens, proper officer will give a notice. Importer is required to pay the duty with interest and penalties and fines. Basically, import duty with interest. Import duty with interest, and if required, penalty and fine. If payment is not made, then proper officer will sell sufficient portion of the goods. In case of these 3 improper removal, proper officer will tell that, see, either improper removal means removed but not as per section 71, or not at all removed within warehousing period, or not properly accounted. Improperly removed. I am giving you notice, please come and pay import duty with interest and penalty. If you are coming and paying, no problem. If you are not paying, I have the right, proper officer have the right to sell the sufficient goods. He will not sell all the goods. Please understand, sell sufficient portion of goods. Sell sufficient portion. Not entire goods. Not, you're not going to sell. You're not going to sell entire goods. Sell sufficient portion of goods. Sell sufficient portion of goods. And finally, if importer has done his work, Tata bye bye to the importer. The goods are properly removed and all the amounts are properly paid. Even if it is improperly removed, but all the amounts are properly paid. Tata bye bye. Tata bye bye. The bond will be returned to him. The bond will be released. The bond will be released. Section 73, cancellation of bond. Tata bye bye. Whether properly removed or improperly removed, but everything is settled, paid. Tata bye bye. The bond will be released. What is the obligation of the warehouse keeper? 73A. Please understand that public warehouse, private warehouse is fully under the control of warehouse keeper. So warehouse goods shall be under the custody of warehouse keeper till they are properly removed. If it is found that the goods are improperly removed, if it is properly removed, no problem. The goods are improperly removed, they will take action against the importer, but warehouse keeper shall be equally liable to pay import duty, interest, penalties and fines. Please understand that action will be taken against the importer as well as warehouse keeper in case of improper removal. We trusted you. We are not having any control over the warehouse keeper because we are now trusting you. If because of our trust, this importer is able to secretly, improperly remove the goods, we will take action against him. We are going to take action against that importer surely. But at the same time, we will also take action against you. You are equally liable. You are jointly and severally liable for import duty, interest, fine and penalties. And not only that, you will be facing other consequences like your license may be cancelled. In the process of cancellation, it may be suspended. So that is all about your basic provisions of warehouse. Yes, talking about the leftover provisions of your warehousing, all are important points. One is you are talking about manufacturing in warehouse. Now, manufacturing in warehouse is generally given to 100% EOU, where they will be using the warehouse for manufacturing and doing the further process. It does not mean that it is open only for EOU, but the intention of having this provision, manufacturing in warehouse, is basically for 100% EOU. And understand that these EOUs, when they are manufacturing in warehouse, they will go for private warehouse. Section 58, private warehouse. So we are focusing on manufacturing in warehouse, section 65. Now what is being said? When you import and manufacture in warehouse, you are importing an item, you are taking to customs warehouse. In customs warehouse, you are manufacturing in warehouse. You are manufacturing in warehouse. When you import, take the goods from customs station to customs warehouse. When you import and take the goods from customs station to customs warehouse, you have not paid import duty, correct? Import duty was not paid in customs station. Even when it was taken to customs warehouse, import duty is not paid. When you manufacture in warehouse, if you export, what you are importing is inputs. After manufacture, what you have is, after manufacturing, what you have is, your inputs will be converted to finished products and waste and scrap, correct? Finished products and waste and scrap. After you manufacture that finished products and waste and scrap, you have to bifurcate the finished products that are exported, the finished products that are sold in India. finished products that are exported. We are not talking about GST on finished products. Correspondingly, on the inputs, import duty will not be there. The related waste and scrap. Waste and scrap generally will not be exported. The related waste and scrap will be either destroyed, or sold in India. Will be either destroyed or sold in India. If the related waste and scrap is destroyed, there will be some inputs contained in that waste and scrap. On those inputs, import duty will not be paid. On that related waste and scrap related to final product which is exported, related waste and scrap which you are not destroyed. If you have destroyed, we are okay with it. If you have not destroyed, then on the inputs used, on the inputs which is there in that waste and scrap, which is not destroyed but sold in India, on those inputs you are required to pay import duty. On those inputs you are required to pay import duty. On the final product that is sold in India and the related waste and scrap, on this related waste and scrap that you have, you don't have any benefit. Whether you have destroyed or whether you have sold in India, you don't have any benefit. You have to pay import duty on the inputs used. On the final product which is exported, related inputs, no import duty. On the waste and scrap that is destroyed, which is related to final product which is exported, no import duty. On the waste and scrap which is sold in India, which is related to final product which is exported, no benefit, please pay import duty. Right. What about final product sold in India and the related waste and scrap, whether destroyed or sold in India? Now you don't have any benefit. You have to pay import duty on the related inputs. Are you guys clear with this understanding? When inputs is initially imported, no import duty. When it is taken to warehouse, no import duty. Later on what happens? We have discussed. And quite logically it is said. Very logically it is said. So, very logically these provisions are given. Now, there's a question by ICA which I would like to give, and it's basically a costing question, right? There is input 1, there is input 2. Input 1, input 2. Input 1 is purchased from within India. Input 2 is imported. This input 1 of 10,000 units along with input 2 of 6,000 units. 6,000 units are used in manufacturing final product which is say 5,000 units. 5,000 units. Right. 5,000 units. Obviously, you also get waste and scrap. Waste and scrap, say 500 units. Out of this final product, 5,000 units. Final product of 2,000 units is exported and final product of your balance final product 3,000 is sold in India. Also note that waste and scrap in relation to final product which is exported will be destroyed. You are ready to destroy. Now calculate the amount of import duty. Calculate on how much quantity of inputs import duty will be there. Calculate on how much quantity of inputs import duty will be there. Now, only in relation to final product. Final product which is sold in India. How much it is? Out of 5,000, 3,000 is there. So, input 2 contained in final product which is sold in India, correct? Input 2 which is contained in final product which is sold in India. How to calculate it? Your basic costing. So how much of final product is sold? So what is the total input 2 quantity? What is the total input 2 quantity? So total input 2 quantity is 6,000 units, and out of which 5,000 units of final product is exported, and how much is sold in India? 3,000. So how much is the input quantity contained in final product which is sold in India? Got that? Got that? How much is input 2 contained in final product which is sold in India? How to find it? Total quantity of input divided by total quantity of final product multiplied by quantity of final product which is sold in. So how much is it? Got that? Got that? Now, input 2 contained in waste and scrap related to what is sold in India. We are not talking about waste and scrap. We are not talking about waste and scrap which is related to final product which is exported, because you are ready to destroy it. Import duty will not be paid. You are ready to see final product 2, you are exporting it. Import duty will not be paid. Waste and scrap used in final product, you are ready to destroy it. Import duty will not be paid. Now how to find that? How to find that? This is actually a question from your ICA module, and it is based on your basic principles of costing. How to find out that? You're talking about waste and scrap. How much is the total waste and scrap? How much is the total waste and scrap? 500. So you'll start with 500 units. Wait, but this 500 units waste and scrap comes out of both input 1 and input 2. Correct? Correct? Waste and scrap does not only deals with input 2. So multiplied by what? Multiplied by 6,000 units input 2 divided by 16,000 units. So you will get the proportion of waste and scrap in relation to input 2 weight multiplied by what is sold in India and total units of final product. See, how do you get this 3,600? Let us work it back again. What is the total quantity of inputs? 2. Total quantity of input to 6,000 multiplied by what is the quantity of final product sold in India divided by what is the total final product. So here you go with final product sold in India divided by total final product. Correct. But here you just cannot take this as final product sold in India divided by total final product. You cannot take that. Now, before doing that, you have to also apply one more ratio. Input 2 divided by input 1 plus input 2. Why? Now, waste and scrap is not only coming out of input 2. It is also in relation to. So, here there is one step extra. So, above you got 3,600 units. Here you will get how much? 500 multiplied by 6,000 divided by 16,000 multiplied by 3,000 divided by 5,000. 112.5 units. So net input 2 contained in waste and scrap which is sold in India. Do not make this mistake of taking 500 multiplied by 3,000 divided by 5,000. No, here you will have a special point. Waste and scrap will be combination of input 1 and input 2. So multiplied by input 2 quantity divided by input 1 and 2 quantity. Multiplied by input 2 quantity divided by input 1 and input 2. Why we are only focusing on input 2? Because input 1 was purchased from within India. So what is the total quantity on inputs which you will end up paying duty? 3,712.5 units. So how much quantity you imported? How much quantity you imported of input to? 6,000. On how much you will finally pay duty? 3,712.5 units. 3,712.5 units. Clear? How we got that? Input 2 directly in proportion to final product sold in India. Waste and scrap in relation to input 2 in relation to what is sold in India. So the two types will come. In relation to input 2 is 6,000 divided by 16,000. In relation to final product sold in India is 3,000 divided by 5,000. Over. 9. This has got nothing to do with your indirect taxes. Conceptually, this was the answer. Conceptually, this was the answer. Correct? Conceptually, we knew the answer here. But how to apply it was understood from your costing. When I give a question where you are having two inputs, one is imported and one is domestic. Your entire focus is only on what is being imported. What is being? Out of 6,000 units, you will end up pay import duty on 3,712.5 units. That is all about section 65. That is all about your section 65. And there are various case laws about change in rate of duty. Various case laws, Supreme Court judgments as well as High Court judgments, mainly Karnataka High Court judgments. So what I have done is, I have consolidated all the judgments and given as a summary of various case laws. Now, what if I tell, when you are taking the goods from customs station to customs warehouse, there is one rate. When you are taking when the warehousing period is over, there is one date. When the interest free period is over, there is one date. And when warehousing period is over, there is one date. So this is warehousing order. This is interest free period, and this is your warehousing period, right? You're talking about entry inside the warehouse, then your warehousing interest period, then your warehousing period. Now let us take case 1. You are exporting from warehouse. When you are entering the warehouse, the rate is 10%. Only dutiable goods can enter the warehouse. So always when you are entering the warehouse, that should be a rate. That should be a rate. Now let us take the cases in such a way. When you are entering the warehouse, always it is 10%. When you are going outside warehouse, assume that you go outside warehouse in this time. Right, you're going outside warehouse. Case 1, import duty rate is, you're going outside warehouse. Case 1, import duty rate is 10%. Import duty rate is 15%, but you are exporting it. Case 2, import duty rate itself is 0%. Case 3, import duty rate is 15% normal consumption. 3 cases. Think and logically answer. When import duty rate is 15%, when you are exiting at warehouse, you are exiting where? You are exiting within 90 days. So case 1, what will happen? Though it is within 90 days, where the rate of interest is, where the rate of duty is 15%. So what rate of duty is relevant for payment? First bill of entry or second bill of entry? Second bill of entry. What is the rate of duty that is relevant? Exchange rate. Bill of entry for warehousing. First bill of entry. Rate of duty. Bill of entry for. So now it is whichever rate is very clear. It is last bill of entry. Now here at the time of taking the goods from warehouse, it is 15%, but still import duty will be 0 because you are exporting it. In second case, you are not exporting it, but import duty rate is 0. So what will be the import duty payment? 0. Why? Import duty rate has become 0, therefore import duty is 0. In the first case, import duty rate was 15%, but you are exporting it, therefore import duty is 0. Third case, you have to pay import duty. At 15%. Though you are going to pay import duty, but you are not going to pay interest. You are going to pay import duty at 15%, but no interest. Why? Within 90 days. It is within 90 days. In the second case, same three scenarios. Import duty at the time of clearance is 15%, but you are exporting it. Import duty is at 0%. Import duty is at 15%. What will happen? Here, when you are clearing it, it is after 90 days, but before 1 year. It is after 90 days, but before 1 year, which means interest will generally start. Why? It is after interest-free period. But before warehousing period, interest will generally start. But what will happen? Import duty is 0. Why? Though import duty at the time of clearance is 15%, you are exporting it. And when import duty is 0, can you have interest? No. When import duty is 0, interest is 0 multiplied by anything is 0. 0 multiplied by anything is 0. When you are clearing it, import duty itself rate becomes 0%. So what will be the import duty? What will be the import duty? And when import duty is 0, whether there will be any interest. When the rate of duty at the time of clearance is 0, import duty is 0. If import duty itself is 0, there cannot be interest. If import duty itself is 0, there cannot be any. So why didn't we write here? In the first case, in all the three cases, there cannot be any, whether you pay or not, there cannot be any interest because it is within interest free period. If it is within interest free period, interest will not be there. Now it is after interest free period, interest will be there only if import duty is some number. If import duty is 0, interest cannot be there. What will happen in the last case? When you are clearing, import duty is at 15%. Whether you will pay import duty? Yes, you will pay import duty at 15%. What is the relevant date for rate of duty? Last bill of entry. So you will always give a bond for 3 times the import duty at 10%. So bond will always be given based on the tentative assessment, based on the first rate, But payment is always based on, your payment is always based on last rate. Your payment is always based on last bill of entry. Now when import duty at the time of clearance is 15%, you will pay import duty at 15%. Whether you will pay interest? Yes, you will pay interest, right? Starting from 91st date till the date of payment. And customs duty rate of interest is, it has got nothing to do with rate of duty 15%. Coincidentally, they are saying import duty rate is 15%. That will be as per question. But rate of interest is import duty multiplied by 15% per annum multiplied by period 91st date till the date of payment. And we have already seen how to calculate. We have already taken an example of how to calculate 91st day. 91st day will be from warehousing order or date of deposit in warehouse. It will be from warehousing order. It will be from warehousing order. Clear? Yeah. Now, if at all you clear after 1 year, I am going to take only one example here because Supreme Court has analyzed only one scenario here. You have cleared after 1 year. When you are clearing it, when 1 year is over, the rate of duty is say 12%. I have taken a different rate. But when you are clearing it, rate of duty is 0%. What happens? Now you are clearing after 1 year. When you are clearing it, rate of duty is 0. But when 1 year was over, it was 12. So import duty rate is 0% at the time of clearance, but import duty was 12% when warehousing period was over. Import duty is 0% at the time of clearance. When you are actually clearing it, 0%. But import duty is 12% when warehousing period was over. Now, if you tell you will not pay import duty, there will not be interest. If you prove that you are not required to pay import duty, there will not be any interest. Rather, assessee actually tried arguing this and assessee won initially. Assessee said that at the time of clearance, there is no import duty. When there is no import duty, there cannot be any interest. When there is no import duty, there cannot be any interest. And finally, department later point of time fought another case where assessee lost the case and department made a superb argument and whereby department won the case. Excellent argument. When your period of 1 year is over, it is improper removal. When your period of 1 year is over and you don't remove the goods, it is improper removal as per section 72. When your period of 1 year is over, if you are not removing the goods within warehousing period of 1 year, then it is improper. Goods are deemed to be removed. Goods are deemed to be removed. So an excellent argument was made. When your period of 1 year is over and you are not yet removing the goods, it is improper removal as per section 72. Therefore, what is relevant is at the end of 1 year. At the end of 1 year, you have to pay import duty at 12%. Therefore, you have to pay interest right starting from 91st day till the date of payment. When your period of 1 year is over, it is improper removal. It is, though actually not removed, but it is deemed to be removed. Though actually not removed, but it is deemed to be improperly removed. So you end up paying import duty at 12% along with interest from 91st day to the date of payment. This will help the department only when there is some rate at the end of 1 year. Now you might ask, sir, what if at the end of 1 year also the rate of duty was 0? Then this will not help the department. This will help the department when at the end of warehousing period 1 year there was a rate of duty and when you are clearing there is no rate of duty, 0%. This will help only in this scenario because the goods are deemed to be removed in terms of section 72. So you will not go with the actual clearance, you will go with the deemed removal. You will not go with actual removal, you will go with deemed removal. When you go with deemed removal, at that point of time import duty rate was 12%. When you have to pay import duty, you have to pay interest on import duty starting from 91st day from the date of deposit, from the date of warehousing order. 91st day from the date of warehousing order, not date of deposit in warehouse. 91st day from the date of warehousing order till the date of payment. A beautiful concept was introduced by the council of the department telling that in this case, when the rate of duty is 12% at the time of 1 year, but when you are actually clearing it is 0%. So actual clearance 0%, but when 1 year was over 12%, we will not see actual removal, we will see deemed removal in terms of section 72, because 72 tells that if you are not removing the goods within warehousing period, it is improper removal, deemed to be removed, we will go with this understanding. Right? Actually, ICA can ask a beautiful question, giving all the datas, important in the last area, giving all the datas and asking question. And this concept of deemed to be removal is applied even for your remission, which means when the period of 1 year is over, importer cannot go for remission. You cannot go for remission in case of loss and restriction. Why? When period of 1 year is over, the goods are deemed to be removed. Now you cannot apply for remission. Forget about remission. Why? Remission is possible only when you come on time. When period of 1 year is over, the goods are deemed to be removed. Now you have to pay import duty. Don't come for remission in case of loss or destruction. Will not give you benefit of remission under section 23 for total loss, major loss or destruction. But unfortunately, there is only one judgment of Karnataka High Court which tells that importer can go for relinquishment of title even after. So everywhere in all the other judgments, be it of High Court or Supreme Court, mainly Supreme Court, they have said that when 1 year is over, deemed to be removed. Don't come for anything else. When 1 year is over, deemed to be removed. So you will say that you will see the rate of duty at the time of actual clearance or at the time of 1 year. When 1 year is over, deemed to be removed. So you will see at the rate of duty when you are actually filing bill of entry for home consumption or at the time of 1 year. At the time of 1 year, deemed to be removed. We'll go with deemed removal. So what we saw in that judgment, when 1 year is over, though when you are filing bill of entry for home consumption, the rate may be 0. But when 1 year was over, the rate was 12%. It is deemed to be removed. You have to pay import duty at 12%. When you have to pay import duty, interest will also be there. Right, starting from 91st day of warehousing order till the day of payment. Interest in customs is 15% per annum. A detailed working of interest you have already completed with numbers. But this concept is not only restricted to calculation of import duty and calculation of interest. The same logic was applied for remission. When period of 1 year is over, tata bye bye. You don't come for remission under section 23 for total loss, major loss, destruction. If there's a total loss, major loss or destruction in warehouse after 1 year, yes, sorry, you cannot come. See, normally when I talk about section 23 benefit, section 23 benefit of remission in case of total loss, major loss or in case of destruction, it is available whether the goods are at customs station or the goods are at customs warehouse. Now one important point to note, it is available in customs warehouse only till warehousing period. Only till if you're coming after warehousing period, forget about remission. So now what is an extra point? It is there at warehouse but only till warehousing period. If you're coming after 1 year warehousing period, no remission. No remission. Likewise, your relinquishment of title. Section 23 read along with section 68. Your relinquishment of title of goods is available both at customs station at customs warehouse. Is available both at customs station at customs warehouse. But here in customs warehouse, it is available whether it is within 1 year or after 1 year. So here warehousing period is not allowed. You can come for relinquishment of title when the goods are at customs warehouse even after 1 year. So here this seems not to be logical. They should not have given the benefit. Rightfully they should have said that when 1 year is over, the goods are deemed to be removed in terms of section 72. We will not give you remission benefit. They should have equally said for relinquishment of title, will not give you relinquishment benefit. Unfortunately, relinquishment benefit is given. So when you talk about the benefits available, remission for total loss, major loss or destruction, and relinquishment of title. At customs station, at customs warehouse. In customs warehouse, within 1 year period after 1 year period. Within warehousing period, after warehousing period. So you can go for benefit of remission in case of total loss, major loss at customs station. You can go for total loss, major loss, benefit of remission in customs warehouse, but within warehousing period, but cannot go after warehousing period because of section 72 deemed to be removed. Deemed to be removed. Unfortunately, I am again and again telling unfortunately, the logic is not applied for relinquishment of title by Karnataka High Court. I believe it should have been applied even for relinquishment of title. Unfortunately, relinquishment of title, you can go at customs station. You can go at customs warehouse, whether it is within 1 year or even if it is after 1 year. Here they don't consider section 72 deemed to be removed. Deemed to be removed. They don't consider section 72 deemed to be removed. Deemed to be removed. They should have considered here, but they don't consider. They should have in fact considered here, but they don't consider here. Clear? Clear? That is summary of various judgments of Supreme Court and High Court. A beautiful point was there. When 1 year is over, the goods are deemed to be removed. So we'll see the rate as on the completion of 1 year, not when you actually clear. Will not give you the benefit of a remission because it is deemed to be removed. But unfortunately for relinquishment, even if his 1 year is over, you can make an application for relinquishment of title. Now coming to the next concept, warehousing without warehousing. Totally in customs law, there are 3 places where you can go for warehousing without warehousing. One is proviso to section 46(1), one is section 49 and one is section 85. So first of all, the name itself is very confusing. Warehousing without warehousing. What does it mean? Warehousing without warehousing means taking the goods to warehouse without complying with the warehousing procedures. No warehousing bond, no warehousing procedure, no period and all. You are taking the goods to warehouse, but warehousing procedures are not applicable. Procedures are not applicable. First such scenario, provision to section 46(1) is when assessee is not able to file bill of entry for home consumption for want of full information. He wants to clear the goods for home consumption, but he is not able to file it. He is not able to file it. He can take any goods for warehousing without warehousing. Goods will be taken to warehouse, but without any bond or warehousing procedure. Right? But he can take any goods only to a public warehouse. Public warehouse. And there's no time restriction and all. So what is proviso to section 46(1)? Particular situation where an importer wants to take the goods for home consumption, but certain information is not available. Say for example, certificate of country of origin is not available. So he is not able to clear it. He is not able to clear it. Right. Therefore, what he does, he is taking the goods to warehouse. But which warehouse? Only public warehouse. No time limit. Second, section 49. What is section 49 talking about? Assessee has already filed bill of entry for home consumption, whether the goods are dutiable goods or non-dutiable goods. But ACTC is satisfied that goods cannot be taken for home consumption. So assessee wants to take the goods for home consumption. He has already filed bill of entry for home consumption. Unlike previous case. Previous case, he wants to file bill of entry for home consumption, but he is not able to file. Here, he has already filed bill of entry for home consumption, whether dutiable goods or not dutiable goods, but ACTC is having some doubts. Maybe he is telling that rate is incorrect, etc. So ACTC is satisfied that the goods cannot be cleared for home consumption. Or another situation, assessee has already filed bill of entry for warehousing, which is allowed only for dutiable goods, but ACTC thinks that they cannot be taken for warehouse. Might be ACTC feels that the goods are smuggled goods or the goods are not at all dutiable goods. So assessee here has done his work. Either he has filed bill of entry for home consumption, which is allowed for dutiable goods as well as not dutiable goods. Officer is having some doubts. Or he has filed bill of entry for warehousing, which is allowed only for dutiable goods. But officer is not satisfied. He is having some doubts. Now, what goods are allowed? If it is home consumption, any goods. If it is warehousing, only dutiable goods. Correct. We have discussed in this first point also. And where they can be taken only to public warehouse. And who is having doubt? Officer. So officer, you keep the goods in your public warehouse not more than 30 days plus extension by commissioner. Whatever doubts you have, you solve it within 30 days plus extension. Understand that here importer is the reason for taking the goods to warehouse. He wants to file bill of entry for home consumption. He is not able to file. So he has not yet filed it. Here who's the reason? Proper officer is the reason. When importer is the reason, he's not having any time limit. When officer is the reason, he is in need of checking something. So he cannot keep the goods for long time, 30 days plus extension by the commissioner. 30 days by himself, 30 days is the basic time limit plus extension by the commissioner. Third case, assessee has already filed bill of entry for warehousing. Look at the language. In the first case, assessee wants to file bill of entry for home consumption, but he is not able to do it. In the third case, assessee wants to file bill of entry for warehousing and he has already filed it. For what type of goods? Not for any goods. We are only talking about stores, because stores can be taken to which warehouse? Stores can be taken to special warehouse. Why? From special warehouse directly they will be given to foreign going vessel or aircraft. No import duty, no need of duty drawback. And why it is coming in warehousing without warehousing in section 85? No need of warehousing bond, no need of warehousing procedure. No time limit. If you read them separately, you won't understand the differences. You will not be appreciating the provision. In all three cases, be it proviso to section 46 or be it section 49 or be it section 85, it is warehousing, taking the goods to warehouse. Without warehousing, no warehousing bond, no warehousing procedure. But look at the difference. In the first case, assessee wants to file bill of entry for home consumption, but he is not able to file because some information is missing. Can he take the goods? Yes, he can take the goods. What goods? Now he can take any goods, whether dutiable or non-dutiable, because he is not interested in warehouse. Dutiable goods or non-dutiable goods. Where? Only to a public warehouse. No time limit. In the second case, assessee has done his work. Either he has filed bill of entry for home consumption for dutiable goods or non-dutiable goods, or he has filed bill of entry for warehousing for only dutiable goods. Warehousing is only allowed for dutiable goods. But officer has to check something. When officer has to check something, he can take the goods only to public warehouse and he is having a time 30 days plus extension by commissioner. The last case, assessee has in fact already filed bill of entry for warehousing. He is not interested. He has already filed it. For what goods? Only and only for stores. Where he can take. In the first two cases, only public warehouse, where he can take. Now it is only special warehouse. SS, stores, special warehouse. Time limit? No. What is the objective? Take the stores to special warehouse. Import was done, but import duty is not paid. It will never be paid. Take it to special warehouse. Directly from special warehouse, give it to foreign going vessel aircraft. So if you import the goods, pay import duty, give it to foreign going vessel aircraft, pay import duty, get duty drawback. But when you are very clear that it has to be given only to foreign going vessel aircraft, don't clear it. Take it to special warehouse. From there, give it to foreign going vessel aircraft. You never paid any import duty. There is no question of any duty drawback. So you are avoiding payment of import duty. There is no need of going for duty drawback. Clear? So if at all I want to interlink provisions, If assessee wants to take the goods for home consumption, but he is not having a particular proof, say certificate of country of origin, either he can take the benefit of proviso to section 46(1), warehousing without warehousing, or he can go for provisional assessment, section 18, provisional assessment. The difference is, if he is going for warehousing without warehousing, he is not paying import duty, but he is not getting the goods. Here, he will get the goods, provisional assessment, but he has to pay provisional duty now. Later on, after information comes, provisional assessment will be converted to final assessment. So both doors are open. Both the doors are open. So he can decide whatever he wants. Either he can go for section proviso to section 46(1), warehousing without warehousing. Don't pay any import duty. Warehousing without warehousing means no need of even bond. No need of even bond, but you will not get the goods. Or you can go for section 18, provisional assessment. Pay the provisional duty, get the goods, get the details, then convert provisional assessment into final assessment. Or this second question. Assessee has already filed bill of entry for home consumption, but officer wants to do something, test the goods. Now, assessee is very clear. Officer want to test the goods. What he can do? Either he can go for section 49, warehousing without warehousing. So, in such cases, goods will not be given, import duty will not be paid, even bond is not required. Even bond is not required. So, in warehousing without warehousing, goods will not be released, import duty will not be paid, the goods are taken to warehouse, but bond is not required. Ties the time limit, 30 days plus extension. Or if importer tells, no, I want the goods, then go for section 18, go for provisional assessment. If you go for provisional assessment, you will get the goods on payment of import duty. So go for provisional assessment. Officer can go for provisional assessment. In GST, officer cannot initiate provisional assessment, only assessee, like the previous case. But in customs, even officer can initiate provisional assessment. Ask importer to pay import duty, clear the goods. So in customs, even proper officer can initiate provisional. Here, who initiated provisional assessment? Assessee wanted provisional assessment. He is not clear with the rate of duty. Here, who is initiating provisional assessment? Proper officer. So provisional assessment in customs can be initiated even by proper officer. Again, two options. Either take the goods to warehouse, do the testing within 30 days plus extension. No need of clearance of goods will not be done. Now you don't pay import duty. Wait for final checking. Or go for provisional assessment under section 18. Pay the import duty, provisional duty, clear the goods. Then after the information, after the checking result comes, convert provisional assessment into final assessment. In customs, even officers' doubt can initiate provisional assessment, which is not possible in, this was not possible in GST, this is possible only in customs. Yeah, this concept is called as warehousing without warehousing.
Now, talking about a very small topic, refund, where we'll be even comparing few numbers of GST as well. Now, refund basically in customs is section 27 and 27A. Application for refund and interest on delayed refund. So, basically the provisions of refund in customs is 27 and 27A. Then what is 26 and 26A? 26 and 26A are special cases of refund. Normally, a case of refund will be covered in 27 and 27A. 26 and 26A is a special case of refund where you're talking about refund of export duty in a special case, refund of import duty in a special case. So normal scenario is only section 27 read along with 27A. Special scenario is 26 read along with 26A. Now before we see those provisions, let us differentiate your refund with a special refund which is duty drawback. So there is something called as refund and there's something called as a very special refund, technically called as duty drawback. Technically called as duty drawback. Refund, why are you getting the refund? You are paid extra duty, therefore you are getting the refund. Why are you getting duty drawback? It is an export incentive. It means you imported the goods, paid import duty, you are exporting it back. As GST is based entirely on destination based consumption tax, they are giving you export incentive, export benefit, promoting export. So the logic of both is different. So when you talk about your normal refund, it talks about what? You're paid extra, you're asking the refund. That is section 27, read along with 27A, and special cases 26 and 26A. But duty drawback, section 74 and section 75 is because you imported the goods, you paid import duty, now you're exporting the goods, they want to promote export. Whatever duty was paid in India will be given back to you. That is export incentive. In case of refund, you have to make a refund application. In case of duty drawback are of two types, section 74 duty drawback and section 75 duty drawback. 74 and 75. Both in section 74 duty drawback and section 75 duty drawback, you have to submit a duty drawback claim or duty drawback application. But in one case of section 75 in duty drawback, which is all industry rate, section 74, there are two types. Section 75, there are three types. So totally how many duty drawbacks are there? 2 plus 3. Section 74, major two types of duty drawback are 2, 74 and 75. Under 74, there are 2 subcategories. 75, there are 3 subcategories. Out of total 5 subcategories, under 75, there is one subcategory called as all industry rate, average rate, AIR, all industry rate. For that all industry rate, your drawback claim is not required. Automatically, you will get the drawback. Refund, it's nothing but a special refund. Automatically, you will get a drawback. For what? All industry rate. This all industry rate comes under section 74 or 75? 75. Out of totally 2 categories of 74 and 3 categories of 75, only in one case, drawback will be automatic, which is section 75, all industry rate. Now, time limit for making refund application, it is 1 year from a relevant date. We'll see what is the relevant date. 1 year from a relevant date. 1 year from a relevant date. Compare with GST. 2 years. Compare with GST. 2 years. In customs, 1 year. In customs, duty drawback is all very fast, very fast. So in AIR, you are not going to make any drawback claim because it is automatic. But in other cases, you are going to make a drawback claim. What is the time limit? 3 plus 3 plus 6. Basic time limit is 3 months plus first 3 months extension on payment of a fees, which is 1% of due drawback claim, or 1000, whichever is lower. Second, 1% of FOB value, or 1000, whichever is lower, not higher, whichever is lower. Maximum fees is for first extension is 1000. Second extension of 6 months, 2% of the FOB value, or 2000, whichever is lower. That will be the minimum fees. Maximum fees in first extension is 1000. Maximum fees in second extension is 2000. So what is the time limit for drawback? Basic time limit is 3 plus 3 plus 3 plus 3 plus 6. 3 plus 3 plus 6. In total, you'll get 1 year. In total, you'll get again 1 year. Now, this will be there only if you are claiming drawback claim separately, which will be there in all the cases of 74 and 75, but not for AIR. This is not applicable for AIR because it is automatic. Once you make a refund claim or a drawback claim, department has to give you the refund or the drawback. What is the time limit for department to give the refund or drawback indirectly? There's no direct time limit, indirect time limit. From where interest will start? From where interest will start? You have to make a refund application within 1 year in customs, and department has to give you refund within 3 months. If not, interest will start. If not, interest will start. Same. When department is giving you, government is giving you 6% per annum. 6% per annum. Now, drawback is very fast. You have to come very fast. 3 plus 3 plus 6. Officer has to give very fast within 1 month. Within, if not 6% interest. If not 6% interest. So normally you have to apply within 1 year, and officer has to give within 3 months. If not, interest. Drawback, you have to apply within 3 months. Extension, forget about it. An officer has to give you within 1 month. If not, interest. If not, now compare this with GST. In GST, when assessee is making refund application is by assessee, refund order is by department. What is the time limit when you talk about your GST? Assessee, 2 years from a relevant date. 2 years from a, in customs, normally it is 1 year from a relevant date. For duty drawback, it is 3 months plus 3 months plus 6 months from the date of export. From the date of export. When officer has to give you an order, it has to give within a particular time. In GST, what is the time? From where interest will start? Indirect time limit for the officer, 61st day, after 60 days. After 60 days of refund application. Refund application. In customs, 3 months of refund application. If not, interest will start. In duty drawback, 1 month from drawback application. If not, interest will start. If not, interest will start. If not, your interest will start. Now, in case of normal refund, your doctrine of unjust enrichment will apply, which means basically you will not get the refund in your pocket. Only if you prove that you have not passed on the burden to the next person, you will get the refund in your pocket. But in case of duty drawback, doctrine of unjust enrichment is not applicable. They will always believe that you have not passed on the burden, and always you are going to get the refund in your pocket, drawback in your pocket. When you talk about non-applicability, if the refund amount is less than 100, there's no question of any, no one will apply, it's only theoretical. And if the drawback claim is less than 50, you cannot come. Refund less than 100, not allowed. Drawback less than 50, not allowed. Only theoretical for your exam purposes, not practical. No one is going to do that. Now, that is the basic difference between your refund and drawback. Now, before seeing the normal case of refund, which is section 27 and 27A, let us try to understand your special refund. These special refunds are connected to your levy chapter. They are connected to your levy chapter. First, let us see section 26, where you are talking about refund of export duty in a special case. Normally, refund is never there. Sorry, normally, export duty is never there. It is there very, very rarely. Correct? Export duty is very rare. Very rare. So, what has happened? You have sold the goods and there is a sale return. You have sold the goods and there is a sale return. So, there is a sale and there is sale return, which means there is export and there is re-import. This has been discussed elsewhere in levy also. Correct? But this time when you are exporting, you are making the payment of export duty. Normally export duty payment is not that. This time you are making the payment of export duty. When the goods are coming back, when the goods are coming back, what will happen? You need to understand two things. There will be import duty application, and there's something about the export duty payment that you have made, that application. What about import duty? Before understanding export part, before understanding section 26, we have already discussed what about import duty. What about import duty? What will be the import duty in case of sale and sale return in terms of notification 45/2017? Lower of actual import duty or export incentives, correct? Whichever is lower. In this case, where you have paid export duty, where you already paid export duty, obviously export incentive will be zero. Export incentive will be, you will not pay any import duty. But in this entire process, don't you think that the goods went and came back? Import duty is not there because notification 45/2017 tells that you have to pay lower of actual import duty or export incentives, whichever is lower. But in this entire process, you already paid export duty. You will get the refund of export duty also. The goods went outside, they came back. It should be free of any taxes. You have paid export duty, you will get back the export duty. Import duty is never there. There's no question of any getting back. Right? There will be refund of export duty. But what is the condition? The goods should come back within 1 year. The goods should come back within 1 year of exportation. If you see the timeline in your notification 45/2017, they allow the goods to be coming back within 3 years plus 2 years extension. But here, if you want refund of export duty, which is very rare, export duty itself will be very rare. If you want this particular refund, it should have come back within 1 year. So the criteria is the goods should come back within 1 year, and after the goods have come back, you have to make a refund application within 6 months of import. You get back the goods within 1 year. You exported, get back the goods within 1 year. And after they have come back within 1 year, for refund application, condition is get back within, re-import within 1 year, and apply for refund within 6 months. Normally refund time limit is 1 year from a logical date, but special refund the time limit is half 6 months. Special refund the time limit is half 6 months. So that is this entire understanding. What is this entire understanding? It is linked with your levy. Sale and sale return, export and re-import. So on re-import, there will be import duty consequences in terms of your section 20 read along with notification 45/2017, which tells that pay import duty lower of actual import duty or export incentives, whichever is lower. In this case, you will end up paying zero. And in this entire process, when the goods are exported, you have paid export duty. When it is coming back, you can claim the refund of export duty. Condition, bring it back within 1 year. The condition is a bit different. Now, not 3 years, bring it back within 1 year. After you export, bring it back within 1 year. And after you bring it back, apply for refund within, normally you have to apply for refund within 1 year, but special case, be it 26 or 26A. In special case, refund application has to be made within 6 months. This is a special case. Your refund application should come within 6 months from the date of, logical date, from the date of re-importation. That is all about your section 26. Refund of export duty in a special case. 26A. Refund of import duty in a special case. Refund of import duty in a, this also is linked to your levy chapter. Refund of import duty in a special case. As an importer, you have imported the goods. Filed the bill of entry for home consumption under section 46. Paid the duty and cleared the goods by getting out of charge order under section 47. You have filed a bill of entry for home consumption under section 46. Paid the duty, got out of charge order, you took the goods. Please understand that the benefit of section 26A is not applicable when you take the goods to your customs warehouse. This benefit is applicable only when the goods are directly cleared from customs station. This benefit is there only when the goods are directly taken from customs station. From customs station to customs warehouse, then clearing, 26A cannot be applied. 26A is applicable only when the goods are directly taken from customs station, not from customs warehouse. So the duty should have been paid and goods should be cleared directly from customs station. But what is happening? There's a problem with the goods which you did not identify at the time of clearance, and practically 26A will be more logical. You might not know the defect. So once you cleared the goods, you found that the goods are defective or not in conformity with your order, not as per your order. Either they are defective or not as per. See, when I tell the term defective, it can be damaged or deteriorated, correct? The term defective here can be connected to the term that we have discussed earlier, damaged or deteriorated, correct? Correct. Defective includes both damaged and deteriorated. So it is damaged or deteriorated, right? Or not as per your order. If goods are fine, but you have ordered for some other quality and you have received some other quality, it's not as per your order. You find that. So what you have to do? You have to apply for refund of import duty if you do something within 30 days plus 3 months extension. The moment you clear your goods, you have to take an action within 30 days plus 3 months extension. First take an action, then apply for refund. 2 stages. First do something. Do something within what? First do something within. First take an action within 30 days plus 3 months extension by the commissioner. Then make an application for refund. First take an action, then make a refund application. What action you should take? There are 3 possible actions that you can take within 30 days plus 3 months extension. And when you talk about making a refund application, special refund time limit will be 6 months from the time when you took the action. Now 30 days plus 3 months will be counted from where? From the date when you cleared the goods, when you got the out of charge order. You are required to do what? Either send back the goods, re-export, or relinquish the title and give the title to the Commissioner of Customs. Either send it back or give up the title or destroy the goods in front of the officer and make it commercially valueless. Make it commercially valueless. Send it back, relinquish, destruction. You are not required to do all either or. Either send back within 30 days plus 3 months extension, or relinquish the title within 30 days plus 3 months extension, or destroy or make it commercially valueless in presence of proper officer within 30 days plus 3 months extension from the date of out of charge order. After you do that, you make a refund application within 6 months of a logical date. Tell me, what will be the logical date? What will be the if I send back the goods, what will be the logical date? Date of export, late export order. If I have given up the title, what will be the logical date? Date of relinquishment. If I have destroyed the goods or made the goods commercially valueless in front of officer, what will be the logical date? Date of destruction or rendering the goods commercially valueless. 2 step. First take an action, then apply for refund. Take an action within 30 days plus 3 months. Then apply for refund within 6 months. Take an action within 30 days plus 3 months from out of charge order date when you got the goods. What action? Re-export, relinquishment, destruction. Then after re-export, relinquishment or destruction, from that time, from late export order under section 51, or from relinquishment of title, or from destruction, from that time within 6 months, make a refund application. Now, certain conditions, we have done this provision, certain things that you need to satisfy. You make sure that the goods that you have brought, you don't use in India other than to find out the defect or non-conformity as per your order. You don't use them. You can use to the extent of finding out the defect or to find out that the goods are not as per your order. Otherwise, you should not use the goods in India. ACDC should be satisfied that the goods which were brought inside and taken outside are the same. Otherwise, few people at times practically colliding with the officer, what they'll do? They have the goods which are already worthless. They'll import this new goods, pay import duty, having an understanding with ACDC, bring another set of goods, tell that they are not of any use for me. In front of him, destroy. Already they are worthless. In front of him, destroy. What is the advantage you get by this? You will get the entire import duty refund. So you get the goods in India without import duty. It's not an idea that you have to apply. I'm telling practically this might happen. Therefore, there is a responsibility on ACDC to make sure that the goods are exactly the same what came in and again what are going out. And needless to say, you cannot have two laddus in your hand. One side you are telling that I'll take this refund of import duty. Other side you are again making a drawback claim, which is nothing but refund of import duty. Drawback means what? Refund of, you cannot get two laddus. Rather, which option you'll advise your client? If your client is doing this, you tell that please go for section 26A, don't go for section 74. The corresponding provision here, option here would have been section, not 75. 75 means you are working on. 74 means imported, exported. You will advise your client not to go for section 74. Why? In section 74, the maximum refund that you will get is 98%. But here you will get the entire refund. Entire refund. What is the point that I am trying to tell? You cannot take benefit of both. Either it is full refund of import duty or you go for drawback under section 74, which is 98% refund of import duty. Also make sure that refund will not be entertained if at all the goods are perishable goods or have a very short shelf life. The goods are perishable goods and short shelf life, they will tell that no. Because they are perishable, the goods now may have been worthless. So this benefit of 26A will not be allowed for perishable goods or goods which are having short shelf life, or you have committed an offence under any law. You have committed an offence under, you are doing smuggling, you are caught, you paid lesser import duty, now they are taking action against you to collect differential import duty along with interest and penalty plus criminal proceedings. You tell that nothing, I am going to send it back. No, not allowed. Not allowed. If you committed an offence under any law, forget about the benefit. The benefit will not be entertained for a person who has committed an offence under any law, fraud person, under any law, under not only in the customs law, under any law. So that is section 26A, where you're talking about refund of import duty in a special case. Now, what is that special case? You understood. Defective or not as per your order. You have cleared the goods, but you find the goods are defective or not as per your order. Now, the normal refund provision is section 27 and interest on refund is section 27A. This is normal refund application. Now, what has happened? You have paid excess duty for some reasons. Now, you are making a refund claim. So, whenever you are making a refund claim, assessee is going to make a refund claim to ACDC. Now, whenever he is making a refund claim, he has to give refund application along with documentary evidence. What is the documentary evidence that he has to give? He has to tell that this is a proof that I have paid extra duty and interest. Maybe challan or a script or an order copy. Plus, I have to prove that I have not passed on the burden. Maybe I will tell that initially I pass on the burden, then I reverse it by giving a credit note, or I may get an affidavit from the customer that I have not passed on the burden. CA certificate per se will not be valid. CA certificate is a supporting evidence, not the main evidence. CA certificate can be along with your credit note for reversal of tax against the customer and affidavit of the customer. Credit note to the customer and affidavit of the customer are the primary evidence. CA certificate is a secondary evidence. As already discussed, what is the refund time limit in customs? Whenever you end up paying more duty, be it import duty or export duty, along with interest. See, when you're paying more import duty, it can happen you are paid more interest. Correct? You can get the refund of excess duty paid or excess interest paid or both. Or both. You have to make a refund application within 1 year from relevant date. What will be relevant date? Relevant date is always a very logical date. Very logical date. You need not buy it. Just think of it and you'll get a logical date. Now, relevant date, if at all, you are getting the refund because of a special exemption order under section 25(2), special exemption order, which means it is going to be given only to special assessees, not for all the assessees in the industry. You would have made a special exemption request in April. You will get special exemption order somewhere in December. But that order in December is telling that you are eligible for exemption right from April, retrospectively, right from between April to December you are paying duty. Between April to December you are paying duty. Now suddenly you become eligible for exemption. That means the duty that you have paid, you can claim the refund. The duty that you have paid, you can claim the from which date? From April or from December? 1 year will be calculated from which date? When you got to know that you are eligible for refund? April month or December month? So it is from the date of issuance of such special exemption order under section 25 subsection 2. Or if the duty becomes refundable to you because of a judgment, decree, order or direction of appellate authority, tribunal or court, you are getting the refund because of order of appeals. That order of appeals can come after 10 years. Can come after 10 years. Now, after order of appeals, you are going to make a refund application. Refund application within 1 year. Within 1 year from where? You paid that duty 10 years back. Now, 1 year will be calculated from where? From the date of appeals order. Only today, after you get the appeals order, you get to know that you are eligible for refund. So, from the date of order. Now, understand that technically, if you are getting a refund because of appeals order, technically, you need not even make a refund application. Though they given relevant date, technically speaking, if you get a refund because of an order of appellate authority, tribunal or court, technically speaking, you need not even make a refund application. Officer is bound to give you refund. And normally, when interest will be calculated in customs? After you make refund application, 3 months. But in this case, technically, you are not required to make any refund application. After the order of appeals, be it appellate authority or tribunal or high court or supreme court, if officer is not giving you the refund within 3 months of order, it is not 3 months of, it is not 3 months of refund application. It is 3 months of order. I'm again repeating, technically you need not even make refund application. They have to give you the refund. Within what time? Within 3 months of appeals order. They are bound to follow their order. Why should I go and tell them that give me my refund? They have to give me my refund within that 3 months of appeals order. If not, interest will start. If not, interest will start. So this 3 months, this time, normally 3 months is calculated from refund application. But this time 3 months is calculated from order. Now, if at all it is a case of provisional assessment, we have discussed that in case of provisional assessment, you can pay provisional duty a higher rate, say 20%, and final assessment may be at a lower rate, 10%, which means you have already paid 20, but what you should have paid is only 10. The excess 10% you will get a refund. Now, when you get to know that you are eligible for refund? At the time of provisional assessment or at the time of final assessment? So, you get to know you are eligible for refund only at the time of final assessment, which at times is called as reassessment. So, you are going to calculate that 1 year from the date of final assessment or reassessment. These are all special cases. What is a normal case? If it is not covered in case of special exemption order or appeals order or final assessment order, then normal case. Take a very normal case. By mistake, you have paid something extra. from which date you are going to make refund application. 1 year will be calculated from where? 1 year will be calculated from where? 1 year will be calculated from the date of payment of duty or interest. The moment you tell that you are paid extra, 1 year will be calculated from the date of that excess payment. The date of that excess payment. But in case refund is applied by the buyer of the importer, I have paid extra, I am not applying the refund, I paid extra, I pass on the burden to my customer. Now, can my customer go and apply for refund? Can my customer go and apply for refund? I imported the goods, I paid extra import duty. It was 10%, but I paid 20. I sold the goods to you, I pass on the burden to you. Now, I can apply for refund, no doubts. But can my buyer apply for refund? Yes. Supreme Court in Mafatlal case said the officer, more logical person to go for refund is not this importer, but this buyer. Because finally the burden is shifted to him. So he can always apply for refund. When buyer of import is applying for refund, what is the logical date for him? What will be the logical date for him? It will be 1 year from where? 1 year from the date of, at times you have to do planning. If I have missed my train, I paid import duty in 2022, right? And I sold you the goods somewhere in 2024. I realized that in 2024. Now, if I try to make a refund application, 1 year is gone. 1 year from the date of payment, which is 2022. But I sold you the goods when? 2024. I'll tell you, don't worry. You go. You go. You go now. This is all tax planning. This is not tax evasion or tax avoidance. It's all tax planning. Now you go. You make a refund application within 1 year from the date of your purchase. You have purchased in 2024. From that date or that particular date, you will be taking a particular date. From that date of purchase, you have 1 year time to apply for refund. Apply for refund. There's a concept called as duty paid under protest. For that, this time limit is not at all applicable. 1 year. Why? This is not at all tax. You are telling that I am not ready to pay this tax amount, but to buy peace with the department, I am paying this amount. Department is telling that 20%, 20%. I am fighting that it is 10%, 10%. And I tell that, okay, I am going to fight this case in appeals. Now I am paying. Now I am paying this excess 10% under protest. When the final appeals order comes, link this with final appeals order. Link this with final appeals order. When the final appeal order comes, automatically department is bound to give me refund. I need not make any refund application. I have already said this point when I said they have added this point to tell that 1 year will start from that. Logically, I am not at all required to make any refund application. Department has to give me that refund within 3 months of the appeals order. If not, pay that amount with interest. Now, as already discussed, refund will not be entertained if the value is less than 100. If it is duty drawback, value is less than 50. Now, in which all cases I'll get the refund in my hand, or in which all cases the refund will go to Consumer Welfare Fund. By default, the refund will always go in the hands of Consumer Welfare Fund. I will not get the refund in my pocket. If I want the refund in my pocket, if assessee wants a refund in its pocket, it should be proving that the burden is not shifted. The burden is not, but there are certain cases where by default it will be assumed that burden is not shifted. And by default, assessee will get the refund in his pocket. What are those cases? What are those cases? If I have imported the goods as an individual for personal use, nothing but my baggage. Nothing but my baggage. If at all you are talking about export duty as discussed in section 20, special refund of export duty, sale and sale return. Sale and there is no question of shifting the burden because no third person is involved. I sold, I got back. I sold, I got back. So refund will come to my pocket directly. Why in baggage there is no question of doctrine of unjust enrichment? I imported the goods for my personal use. There's no question of shifting the burden because I never sold the goods. Because I never sold the goods. Or in case of duty drawback under section 74 or 75, export benefit. Whenever you go for duty drawback, whenever you export the goods, it is always assumed that you export only the price, you don't export the taxes. Export the goods, export the service, not the. It is always assumed that you did not export the taxes, you did not shift the burden, so benefit will come to your pocket. Or you paid extra duty in case of self-assessment, that excess payment is reflected in bill of entry. Before you got the out of charge order, you realize that you have made excess payment. For example, the duty payment was 1 lakh rupees. By mistake, your employee has typed it as 10 lakhs. So that is excess payment of duty paid, which you realize before officer is giving you out of charge order. Which you realize before officer is giving you out of charge order. There are two types of bill of entry: self-assessed bill of entry, reassessed bill of entry. Normally it will be self-assessed bill of entry. If officer is having doubt, he will reassess the bill of entry. In case of self-assessment, that excess duty paid is reflected in your own bill of entry. In your own bill of entry. In case of reassessment, the excess duty payable is reflected in your reassessed bill of entry, which means reassessed bill of entry shows 1 lakh, but you have paid 10 lakhs. But you have paid. Think of this. Out of charge order you have not received. The moment you have not received out of charge order, can you clear the goods? No, you cannot clear the goods. If you have not cleared the goods, is there any possibility that you have shifted the burden? Is there any possibility that you have shifted the burden? No. What is the understanding? You will get the refund in your pocket. You will get the refund in your pocket. In these four cases, other cases you have to prove that you have not shifted the burden. In these four cases, by default, it is believed that you did not pass on the burden and you will get the refund in your pocket. Whether it is baggage or whether it is export duty refund under section 26 or whether it is duty drawback under section 74 or 75 or whether it is excess duty payment which is reflected in your bill of entry, self-assessed or reassessed bill of entry, but out of charge order is not yet passed. You have not yet cleared the goods. In all these four cases, you will get that excess payment of duty in your pocket. Other cases, you have to prove that you did not pass on the burden. If you prove, you will get in your pocket. Otherwise, the amount will go to Consumer Welfare Fund. And with respect to interest, I guess we have already discussed how interest will be calculated. Within how much time department is having, what is the time department is having to give you the refund? There is no direct time limit for department. Indirect time limit is there. If they don't give you the refund within 3 months of refund obligation, they have to pay with interest at 6%, right from the next day of 3 months till the date of actual refund. At times, if refund is because of appeals order, 3 months will be calculated from appeals order, not from the refund application. And they have also clarified that we are not going to give you any interest on your deposits, be it your security deposit or project import deposit. Deposit is the amount that you are giving for our security purposes. On these deposits, we are not going to give you any interest. On the deposits, we are not going to give you any interest. So that is all about this very small topic called as refund.